Nice to see you. Thanks very much indeed for stopping by to see us. Maria Faimana, Head of Equity Research at State Street Global Markets. Core 6 looks a little like this morning. There is a lot of activity in the luxury space. It is under pressure. I could argue maybe you would have seen more. A 200% tariff on champagne. LVMH is down by 1.5. It was under a little bit of pressure yesterday. Defence stocks are coming off. Tech, there you go. ASML, one of the few standout stories at the upper end of the markets this morning. Let's find out what else we're watching with Jennifer Creary.
That's right. We're keeping an eye on some of those French drinks makers. LVMH, Pernod Ricard, Rémy Cointreau, all down in the red this morning. That's after the US President Donald Trump floated a 200% tariff on French champagne and wine makers. That's in retaliation to French President Emmanuel Macron's refusal to join his board of peace. Macron raising concerns over respect for the United Nations principles and framework, those weighing heavy on drinks shares this morning. We've also got Renault up in the green, up more than 3% this morning. That's after the company announced that it's contributing to the development of the French drone industry. Of course, investors on the lookout for stocks that are poised to benefit from additional military spend from European countries. Those shares positive on the open. Next up, we're taking a look at BHP as well. Down in the red this morning, down almost 2%. That's following on from a drop of 2% in Australia as well. That's after the world's largest miner raised its projected investment in its potash project in Canada to $8.4 billion. That's up more than $1 billion above the upper range of its previous guidance, weighing on the shares this morning. And finally, we've got Wise as well. The company reaffirming its underlying income forecast for the full year. It's also seeing its margin at the high end of its stated range. Those shares soaring on the open, more than 10% off the back of that news.
Okay, Jennifer Creary on some of the stocks that are on the move this Tuesday. Jennifer, thank you. Coming up, we are joined by Laila Ibrahim, COO at Google DeepMind. Expect top lines on all things tech and AI. We're just talking about the AI trade, of course. So more insights from someone near the top, of course, of the chain when it comes to DeepMind. That's coming up. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome back to the opening trade. 8:16 here in London. Equity markets 16 minutes into their session, and stocks are weaker for another day. Let's check out what's happening in the bond markets, though, because there's a lot of news flow being generated there, or a lot of movement generated there because of the news flow coming out of Japan over recent days. Election is called, fiscal worries to the fore, and so we see Japanese bond yields up by 26 basis points at the 30-year tenor, and for the US markets, for treasuries, up by 8 basis points at the same time horizon, Guy. So once again, worrying about the long end of bond markets.
Gilts market moving at the long end as well. There's a huge move in the bond market, and it's rippling into other asset classes. Geopolitics a big feature of the landscape as well. Hard to kind of separate that out. Plus, you've also got to throw in what is happening around AI. That AI story, certainly a big part of the Davos agenda as well. Let's get a little bit more on what is happening on that front. Let's hand things back to Francine Lacroix at the World Economic Forum.
Anna, Guy, thank you so much. I'm delighted to be joined by Laila Ibrahim, CEO at Google DeepMind. Laila, as always, thank you so much for joining us. Look, it's very clear that President Trump has stolen the limelight. Everyone is talking about trade and tariffs and what's happening with Greenland. This was also meant to be the tech show. We have all the biggest tech companies here. Like, how, what will you focus on this week to try and get the most out of Davos?
Yeah, well, these are certainly interesting times, and as a global organization, we really need an opportunity like Davos to be able to have many different conversations. We operate in continents around the world, and we try to focus on what we can really control, which is how do we make sure that AI is being developed responsibly and to benefit humanity. So we're really focused on a lot of those conversations this week.
Laila, what is DeepMind now? Is it still a research lab, or is it more like a product company?
Well, DeepMind was founded originally about 16 years ago as an AI research lab, and it continues to operate as such. But we've also been able to bring in becoming the AI innovation engine room for Google. So everything from Gemini and our latest models like Nano Banana, all the way to some of our scientific breakthroughs and our work in terms of what might the next breakthroughs in AI be, such as what's the next transformer technology. So we have quite a broad portfolio.
How much are you working on enterprise? I know Code is a big hit with developers. When will Google's versions, anti-gravity, come out?
Yeah, well, we've been really focused on continuing to make Gemini a really powerful model, bringing in capabilities that we think can unlock human potential. And Code was one of the areas that we really focused on in the past year, and really pleased with the progress we've seen with Gemini 3, which was announced at the end of last year.
So what's next for Gemini? Are you hiring more people to work on it?
Oh, and we're always looking at our talent. And so on Gemini specifically, we're continuing to think about what are the capabilities that will continue to increase the making it valuable for users. So things like, how do we continue to make it more factual? How do we help with things like reasoning, concepts, memory? We really believe that we could have a personal assistant, but in order to do so, there are a lot of areas that we need to work on, such as privacy, as well as how do you make sure that you have memory. So the AI understands me and my preferences and my needs, and I can use it as a tool as part of my everyday work. And what that requires is really understanding more of kind of the world model, the context around us in our daily lives.
Is there anything that you've put on the back burner because of your big focus on Gemini?
Well, an organization like DeepMind, I think one of the extraordinary things is that we have been able to keep the breadth of portfolio. So when you look at last year, not only did we have Gemini and VO, progress in our video generation, audio, imagery, but also things like Weather Next 2, being able to predict weather forecasts, like 50 different paths of a hurricane for the next 15 days, which really, if you think about it, can really help with emergency preparedness. We've also made significant progress in some of our materials discovery to help with superconductors, to power supercomputers, or next generation batteries to help with electric vehicles. We've continued to advance work in synth ID, our watermarking technology, ancient text to help us understand the past. I think there's so much exciting work that's happening, and that's actually what makes this such an extraordinary place to work. Is I've never been in a place that the human. We're only limited by the ideas that we have. What are the biggest world problems that we might be able to address with AI?
It's going so fast. What are some of the ethical questions? I mean, you touched on privacy. There's a couple of other things that I know you think about, but how should we be looking at it? Because this is also a race. I mean, this is probably the biggest geopolitical race, even with other countries, including China. And so I wonder whether when you build it so fast, there's things that could break.
Yeah, well, we're always thinking about responsibility, safety, security from the very start. In fact, when we embark in our research projects and start to define them, we're also thinking about what are the risks, how might we mitigate them, if we don't have the expertise around the table, who are the partners that we need to partner with, but then also what are the opportunities and how do we make sure that we're not solely focused on the risks, that we miss the opportunities and invest in those. One of the things that I've been really excited about in the past year is some of the progress we've made around making Gemini better for learning and education. How do we make it more efficient, more effective, more engaging, so that learners, regardless of where they are in their life journey, the technology can meet them where they're at. And that, of course, also brings up a lot of questions and concerns that we have about, like, what is the relationship that humans have with their AI? How do we think about mental well-being? These are all areas of research and investment that we're making up front so that we can develop both the innovation as well as mitigate the risks and do so responsibly.
What are business asking you? So I'm sure you're meeting with a lot of big chief executives here, and a lot of them are excited. They're investing quite a lot or buying some of your models. But what do they need for their staff?
Yeah, well, one of the questions I got last night at dinner was about this, are we prototyping too much? Is there too much piloting going on? And my response was, no, we're still early in AI's development. It can feel like we're far further along on the technology curve than you might expect, but there's still so much work to be done to make the models even better and more valuable for users. And as a result, we're never going to have as much time as we do right now to explore and really understand how do we want to shape the technology? Where and how do we want to set the boundaries? One of the things I've done with my own team is to say we need to be experimenting with using AI as part of our workflow. Right. And at the same time, what are the very human elements that we're bringing into the job that we should actually celebrate, retain, invest in? And I think it's really this kind of co-development of AI in the workplace, also recognizing the human value, and that's how we're going to shape how AI will reshape our jobs.
Lila, what is your biggest concern regarding, I mean, away from ethical questions, is it actually access to power? So is it trying to figure out the energy complex? Or is it just making sure that, rivals like Meta don't poach your staff? It seems like it's a massive global talent war, like maybe the banks were facing 10 years ago.
Yeah, well, actually, on the talent side, we tend to focus on is how do we make sure that we hire really good talent that are very values aligned with the work that we do. And because our mission is to build AI responsibly to benefit humanity, that shows up in the people that we hire and the culture that we build. And so from a talent perspective, I feel like we know what we want to do there. The ethical questions, I think it's not just about the ethics questions, it's also about misuse. So we think a lot about how do we make sure that the benefits are significantly outweighing the risks and the potential harms. So we think a lot about the governance, how do we make sure that this is regulated well, how do we operate responsibly in the countries where we are. I have to say that really what keeps me up at night is the risks. Are we doing everything we can to mitigate them? Are we thinking enough around the corner? Yeah. Because if you're not investing in that early, you can't be a bolt-on, right? It needs to be very early on. And then also, are we investing in the opportunities? We believe AI could be one of the most transformational technologies of our time, and we're already seeing how it's empowering creatives, how it's improving education and learning, how it's unlocking productivity and advancing scientific breakthrough. We're seeing real-world impact right now. And so I also worry a lot about, are we really maximizing the benefits to provide as much as we can for the world.
Lila, thank you so much. Lila Ibrahim there at Google DeepMind COO. Back to you in London. We'll have plenty more and throughout the day here from Davos.
Francine, thank you. Back with Francine and the team as we go through the programme. Tom, we've got a focus on, I said champagne earlier, it's actually wine and champagne that President Trump has threatened to put a 200% tariff on. And so we'll continue to keep an eye on what's going on with LVMH and Pernod, because this is just wider than just the champagne sector. But those stocks certainly in focus, although Pernod Ricard going higher this morning.
I think our favourite stock of the day is, or at least our favourite stock story of the day, is potentially Ryanair and the spat between Michael O'Leary and Musk, of course.
It's easy to not take seriously, isn't it? But then you remember what happened with the purchase of Twitter. Nobody took that very seriously to start with, did they? And then here we are.
It happened.
Yeah, okay. I struggle to see how this goes much further, but I guess you've just got to price it in and
attach a low probability.
Attach a low probability and see what happens. But it seems to be moving the stock. The story is the bond market though this morning. Epic moves we're seeing out of Japan, rippling into other bond markets around.
And maybe another reason why European stock markets failed to bounce this morning. Another reason to be concerned.
Yeah, the sell-off is there, and it's rippling across, arguably, to the equity space as well, to your point. Coming up, more on the tech theme, though, as we head back to Davos to talk all things technology investment and AI with Fabrizio Blasi, who is the CEO of Naspers and Prosus. That is next. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
This is the opening trade. We are 30 minutes into today's session, so the selling pressure continues across the European equity space after losses of 1.2% yesterday. Further downside today, down 0.7%. The luxury names under pressure again on the tariff threat, but there's a sell-off in the global bond markets as well, particularly at the long end, and we'll get the details on that shortly. This is rippling across the equity markets as well. Arguably, it's not just trade and tariffs and Greenland, it's also what's happening in terms of the ripple effects of Japan and the sell-off there. So we'll start with the Japanese 30-year, where yields funds are up 26 basis points. That's where the pressure is. The 10s are selling off as well, and you're seeing that then read across in terms of US Treasuries. The 30-year at 4.92. When do we get to 5% on the 30-year? Closing in on that with moves of basis points, 8 basis points higher on the 30-year. Here in the UK, the 30-year is also high. Yields up 6 basis points, 5.22 now on the long end of the UK gilt markets. We're seeing the effects already, Guy, in terms of the concerns domestically in Japan about the fiscal spend and cuts around consumer goods and the global effects of that.
It's going to be interesting to see how it plays out over the next few days. Okay, let's talk about the internals and what is happening in this market. They've got a 5-to-1 ratio basically in terms of losers versus winners. Only 97 stocks up in the stock 600. You've got relatively light volume, which I think is interesting. Maybe we need the US to reopen to get a volume picture coming through. Let's talk about stocks that are higher today. Wise, the transaction company, up today on an update, Q3 update. It's also talking about a US listing. That stock is up by nearly 13%. I'm averaging, pushing it up a little higher. Ryanair's up by 1%. I think we're fading the idea that maybe Elon Musk could buy Ryanair. ASML, though, now moving into negative territory, so there's some of the tech kind of heavyweights that initially lifted the market beginning to fade, which is interesting as well too. So even the leaders now seeing some red on that board. Let's talk about where we are. Certainly seeing some losses. The pharmaceutical space is down. Astra's down. Roche is tracking a little bit lower. Keep an eye as well. The Supreme Court potentially ruling on tariffs a little bit later on. That's a factor in that sector. But the tariff story certainly writ large when it comes to luxury. LVMH, big maker of champagne and wine, down by 1.75% on that tariff threat, Anna.
Let's talk about some of the other news flow, and we'll start with what's been driving bond markets. The slump in Japanese bonds deepened earlier today, sending yields to records as investors gave a thumbs down to Prime Minister Sanae Takaichi's election pitch to cut taxes on food. The Japanese 40-year rate topped 4%, the highest level since its debut in 2007. The yield on 30-year JGBs climbed by more than 25 basis points. Donald Trump has threatened to impose a 200% tariff on wine and champagne from France. This after the French President Emmanuel Macron declined an invitation to join the US President's proposed Board of Peace for Gaza. Sources say that President Trump wants the full constitution and remit of the committee signed in Davos on Thursday. Meanwhile, Donald Trump has renewed his push for the United States to take over Greenland, claiming the European Union won't resist much. Speaking about the Arctic territory late yesterday evening, the US president said, quote, "We have to have it." He added that he will meet with several parties in Davos over his ambitions for the country. Tom.
Okay, well, let's get back to what's happening in terms of the conversations in Davos. But before we do that, European stocks, of course, outperforming the US so far this year. The dynamics, of course, have changed in the last 48 hours or so, with tech names in the driving seat. Is that momentum now at risk from those rising trade tensions? That is a topic of conversation on the ground at the World Economic Forum. Let's bring back in Bloomberg's Francine Lacqua, who is there with a guest who has an insider view on the sector. Fran.
Yeah, an insider view, because joining us now is Fabrizio Blasi. Tom, thank you. He's the chief executive of Prosus and Naspers Group. Fabrizio, as always, thank you so much for joining us. Look, you've been on the acquisitive trail. I mean, you've done a couple of things that were quite big. You've gone after large assets in Europe, including Just Eat. What happens next? Do you have appetite for more?
Francine, pleasure to be here. It's always a pleasure to be here with you. Yeah, very excited, just getting started. We did like $8 billion in acquisitions last year, what included Despegar in Latin America, then Just Eat Takeaway in Netherlands, and then we did La Centrale in France. So it's a good start, but I think we have everything ahead of us. For sure, we are willing.
More to come?
More to come, I'm sure.
How much money do you have to spend?
We have more, at least $10 billion more to keep investing. And I see so many opportunities. The world is changing a lot. Actually, I think we are starting realize now we are in a new world order. In this new world order, everything changes, and there will be much more growth in AI technology outside US. Over the last 2-3 years, all the wealth creation in technology was in US. What we believe is that after this decoupling that is happening right now, we will see much more growth all around. So we are investing a lot in India. We did 5 IPOs in India this year. We are ready to do more acquisition investments and IPOs in India. I think India is growing a lot, more than 7%. It's the 4th biggest economy. We did a few acquisitions in Latin America. Now we have a very big group of tech there, and I think we can do much more. I think Latin America has the space to have $100 billion business there. And Europe is my passion. I committed to Europe. We did Just Eat Takeaway in La Centrale, like $6 billion in investments. And I think we can do much more. Hope we can move much faster. That's my...
Okay, faster because you're frustrated with regulation in Europe. You were telling me that. But what do you want to go after? What will you do, for example, with your stake in Delivery Hero?
Yeah, when we did the Just Eat acquisition, the commitment we had to do is to have to divest $3 billion before we can do more acquisitions. I think this is a big mistake for Europe. I think Europe should be talking about how we invest more and faster. But actually, we are talking about how I divest faster. I think this is absurd. I think the competition authorities in Europe said no to the Siemens-Alstom deal 5 years ago to create a big transportation global business. We don't consolidate banks. We don't consolidate telecommunication. We are not consolidating or have a bigger group in food delivery. I think this is a mistake. I think this is, we are behaving as if we were in 1996. We are in 2026, and the world now requires big tech in Europe. So I am legally obliged now to divest the Delivery Hero. What a big mistake. I'm sure because the world changed that Europe is going to keep changing, and understanding that we have to build big tech here.
Fabrice, it's very clear that the Trump administration is here. They're taking aim at Europe because of their treatment with tech and big tech, and because they say on the geopolitical front they're too weak to actually defend something like Greenland. Like, do you agree fundamentally with Trump that the European economy is broken?
I see Trump saying, I'm here to defend the interests of the American companies and fighting for that. Fighting for that aggressively, let's say this way. I see other countries also fighting for their companies. And I think the difficult decision that Europe has to do, and they have to do trade-offs that they are not doing today, is to say, we need to have big tech in Europe. Otherwise, the big tech is going to be in China and US. And I don't think these big decisions are being done yet. For example, as I told you, we really need to consolidate and have bigger technology companies here. I don't think it's happening.
But it doesn't deter you from looking at other assets. So is there a particular sector that you want to be more involved in Europe?
I think that the disruption happening right now is on AI, obviously, and assistants. Over the last 1 to 2 years, we have assistants that answer all the problems you have. But what we really bet now is in assistant that do things, assistant that deliver real work, real things, assistant that you can ask something to them and they can make your life easier. And we are a very big player on that. Outside of China and US, we are by far the biggest player. So we do food delivery all around the world with hundreds of millions of customers. We do travel, mobility, events, grocery, pharmacy. So I think the big thing for us is to connect the AI world to 1 billion customers where they can just ask and have their problems solved. So I think a few years ago, people talk about super app, like an app that do everything. I think the direction now is a system that connects the real world to the artificial intelligence world. And I can't think of a better company to do that outside US than Prosus.
Okay, so what are you looking to buy? And actually, if everything goes to plan, and that's a big if, what does your company look like in 2028?
We are going to keep expanding in the position that we have today of marketplace that deliver, as I said, many real-world services and also e-commerce and payment to really take all the friction, and people, as I told you, can just ask your virtual assistant and have all those services delivered. So we are looking obviously for food delivery consolidation. We are looking for all the adjacencies, so we can really make our customer life easier.
Does this super app or the super assistant, does it have to be European made because of friction with the US and US tech companies?
I think, as I told you, it's a new world organization. You have to do that on Europe. You have to do that in India. You have to do that in Latin America. You have to have local technology that enable those countries to have sovereignty in this kind of services. And that's the Prosus approach. So we have today a big lab of AI in Europe called Prosus AI Lab. In Netherlands, we also launched the AI House in Netherlands, and we are expanding that in Europe and also in India and Latin America.
What happens to your Tencent stake? Do you wind that down?
We are a big shareholder of Tencent. We are a big believer of Tencent. We sold a little more of Tencent lately, but I want to reinforce, I think Tencent is the biggest company in China. It's an amazing company. And during the artificial world...
Will you sell a bit more?
I just announced a few weeks ago that we changed substantially our buyback. So now we are doing a few buyback with Tencent. But right now, our buyback is financed more of non-Tencent assets than Tencent. And I think this is very good for pros. I think Tencent has an amazing future. And remember, in artificial intelligence world, having WeChat, it's an amazing asset. I think what Tencent can do is just getting started. So we are selling much less of Tencent, and we are keeping our buyback. We even increased the buyback, selling other assets with less future than Tencent.
Fabrizio, thank you so much, as always, for joining us. That's Fabrizio Blasi, the CEO of Prosus and Naspers Group. But back to you in London, Guy. We'll have plenty more, of course, from Davos throughout the day.
Looking forward to all of that. The message, a simple one there. Europe, get your act together. You can't be thinking that this is 10 years ago. 2026 is a different ballpark. Plenty more great guests coming out, as Fran says, from the World Economic Forum in Davos today. The Finnish president, Alexander Stubb, is going to be joining us a little bit later. The CEOs of both Merck and Novartis on deck as well, as will be the Bank of France governor. What does he make of what we are seeing in the markets today? Big moves in bond markets. And, of course, UBS, his CEO, Sergio Mossi, will be joining Bloomberg. Looking forward to that conversation.
Okay, so those are some of the conversations coming up. There is a conversation happening right now in Davos at the Congress Center. Bloomberg's head of economics and government, Stephanie Flanders, as you can see, is speaking with Uber's CEO, Dara Khosrowshahi. Let's take a listen.
Revenue-based. And one of the advantages that Uber has is that we know today how much essentially a human driver can bring in terms of revenue. We take about a 20% cut, et cetera, of that revenue. So 80% goes to the human driver. We can sign up for a revenue model that has a high degree of certainty. And as a result, today we're working with very large financial institutions to essentially prove out the financing model for these fleets. We will take balance sheet risk to begin with. But as we prove out this revenue model, then we see significant capital players who are very, very interested in coming into this market. It's a non-correlated asset, so to speak. It will be a very, very large market. And essentially, just like you see these REITs, real estate investment trusts, that own hotels, that own shopping malls, et cetera, trading in the public markets, we think you'll see kind of these fleet entities as well. Public and private insurance companies owning fleets in different cities, and we will be a very big part of that.
You think, but in terms of proving the case for that, will be entirely revenue-based, and you'll have the yardstick of Uber currently?
Exactly.
Okay. When you're working, I think you've mentioned in the past that you have trouble sometimes on the hardware front, and I just wonder, are you finding it difficult? What are the challenges of trying to get car manufacturers to work with you in some of these areas?
Yeah, I think the car manufacturers are finally seeing this market as a very, very large potential market. So the issue isn't having trouble on the hardware, it's bringing the cost of hardware down. And I think we're probably 2 generations away. Right now, you can build a hardware, but every build is bespoke.
2 car generations.
Yeah, but 2 car generations. So it's the next generation of cars. You won't have bespoke builds. The cost of sensors is coming down very significantly. Cost of compute is coming down. NVIDIA is building a reference architecture that we think is very, very good for the industry generally. But it'll take 2 generations of hardware to get to pricing well below $100,000. Which truly makes this a mass market product and something that we're very, very much looking forward to.
Are there particular manufacturers who are closer to that than others?
Every car company is talking about it. I wouldn't say anyone is in the lead. This market is a market that's ready to be taken by OEMs that take a bet on it.
When you look at, as I'm sure you do, some of the assumptions built into investors' models, the ones who are most bullish about this, which seems to be all the people who are buying, how stretching, I mean, I wouldn't expect you to say, oh, it's all overvalued, but how much, in your view, are they conservative or are they highly optimistic in terms of how long it's going to take to make revenue from some of these things?
You know, the market for AV investment, it's mostly private companies, and Waymo is the leader there, but there are a number of Chinese companies out there, and I don't think actually that market is particularly overheated. I think that the potential is trillions of dollars in incremental spend, transportation spend. I think, again, every single vehicle sold, new vehicle sold 10 years from now is going to be L3 or L4 ready. So I think the market is enormous. And I don't think the market is overheated by any means. Now, the overall AI market in terms of foundation models, hardware providers,
Okay, the CEO of Uber speaking to Bloomberg, Stephanie Flanders there, about the evolution of autonomous vehicles, the hardware piece, and how AI is going to play a role as well. Let's get back to the markets briefly, because, of course, you continue to see the sell-off in the sovereign debt markets, particularly at the 30-year level when you look at US Treasuries and gilts as well. The European stock market, further losses there, accelerating the losses, down 0.9%. So, given the losses of yesterday, it's pretty sharp in terms of the downside that we're seeing. The FTSE 100 also off by a full 1%. S&P E-minis looking to reopen, of course, after the holiday yesterday, pointing lower by 1.6%. Nasdaq 100 futures down by 475 points, and the Russell 2000 has so far outperformed year to date, pointing lower by 1.8%. Plenty more coming up. Stay with us. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. This week, live from the Alpine Mountains of Switzerland, is the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate responsible AI deployment, economic expansion, and geopolitical tensions. Tune in for daily coverage all week. Context changes everything.
Welcome back. This is the opening trade, 8:50 here in London, and European equity markets, well, we're not buying the dip just yet. Yesterday was negative for European stocks on the back of trade tensions. Today appears to be the same in the sense of the direction, not necessarily the magnitude. US futures, of course, pointing lower because they are looking to catch up. Tom, we are going to be thinking about trade, perhaps, as we go through the day. What else is on the radar?
Yeah, ECOFIN meeting will be happening in Brussels, so we'll listen out, of course, for any sound, any further responses to the continuing pressure and threats over Greenland coming from the Trump administration at 9:25 a.m. UK time. Talking of the Trump administration, not directly part of the administration, of course, but the US House Speaker Mike Johnson of the Republican Party will be addressing the UK Parliament, which is interesting, of course, on the 250th anniversary of the United States. And the UK deadline to approve that Chinese embassy, that's also today as well. Expect that reporting suggesting that that's going to happen, and Prime Minister Keir Starmer could be visiting Beijing later this month. We're also going to get those Supreme Court hearings we'll be discussing as well. So potentially an opening today for the ruling on IEEPA tariffs. On Wednesday, it's the Supreme Court starting to look at the Lisa Cook case, which arguably could be more important for the markets, or equally as important as well. And we're also getting earnings from the likes of Netflix.
It's huge. The risks, there are so many risks out there. Supreme Court, that's going to be massive. What happens around Greenland? What's happening with the Japanese bond market? Chagos, let's throw the kind of the UK angle. There's so much for these markets to deal with this one. I don't know how you price it. What I'm stunned about is that risk isn't higher. The VIX is at 20. Woohoo. We're up a little bit, but we're definitely not elevated at the moment. Let's talk to Mike Masika about this, Senior EMEA Equity Strategist and Scarlett Montgomery-Koenig for our M Live team. Good morning to both of you. Welcome back. Mike, let me start with you. Is this a market that is ready for a sell-off?
Well, Guy, it's a market that's definitely ready for profit-taking, and a little bit more than what we've seen. The reason is, like, very, very few investors have protection right now. Everyone is long. The Bank of America Fund Manager Survey just came out this morning. It's the most bullish in 5 years. Like 48% of investors don't have any protection whatsoever. That's the most in 8 years. Bull and bear ratio is like at hyperbull level.
So we're all in, basically.
I mean, everything is all in. Cash levels are record low, 3.2% of portfoliows. Never happened before. So again, like, you get a little bit of friction, a little bit of tension, and you get profit taking. You have to have that.
Mike, how much of what we're seeing in the markets today is down to higher yields and the selling of sovereign debt versus trade tensions?
Most from what we've seen, most of the issue is the trade tension, and actually it comes back to that survey. The number one reason for potential sell-off, according to a very large number of investors, is now geopolitical tensions. This was nowhere to be seen in the past 3 months. In the survey, I mean, and now it's like number one tail risk for the market. Way above.
How do you price
AI.
it though?
It's interesting. The market tried to look through Venezuela, look through Iran, its most recent iteration at least. I mean, Skylar, we are seeing markets reflecting on some geopolitical. Well, no, it isn't geopolitical tension that's pushing up long end yields, is it? It's political concerns about Japan, which could be linked, but that's where we are right now. What do you make of the moves at the long end of the curve, and how global that conversation goes?
Yeah, absolutely. I mean, I think particularly in Japan, the worry is very reasonable in that debt to GDP is the highest in G10. You have fiscal just rising from here, so that debt to GDP ratio is getting worse. You also have this duration mismatch where you've been able to fiscally expand because you've bought lots of risky assets abroad. And so as your yield rises or as your interest rate rises, that becomes more concerning from a fiscal, area issue. And then I think, too, you need to think about, like, term premium generally in the 2010s was just structurally too low. So we're just transitioning to that higher environment. And there should be ricochets into other markets because it's not just Japan that has fiscal worries right now. And the correlation between Japan and European bonds actually is the highest in the last year than it has been relative to the past 10 years.
We're going to get repatriation. I think that's what everybody's trying to work out. You talk about it kind of moving into other markets. Japan's been the kind of the piggy bank of the world. It's provided huge amounts of liquidity. If that sort of turns on its tail, what are the implications?
Yeah, I mean, that's a massive risk in terms of a huge amount of U.S. assets are owned by Japanese investors. So whether or not that rotates away is a big question. And it's also coming up in the discussion around, is that going to be a political weapon from a geopolitical perspective? As in, are you going to sell U.S. assets as a result? I think the question more relies on how profitable are U.S. companies, how high is the yield? Because if that stays high, then there's not a reason to sell those assets.
but we're potentially getting closer to that point.
Yeah, it's just another factor, isn't it?
Yes.
Mark Cudmore was talking about Japanese JGBs need to find a floor, and then we might see that play out. I suppose that gives you more of a sense of what you're dealing with.
But you've also got this whole threat about, are we selling America? Is that trade back on? Does geopolitics make you want to sell America? Does the turbulence in America make you want to sell America? Besson was trying to play that down.
Do you take that seriously, Michael, the idea that rather the public institutions that own US assets could be leaned on in the worst case scenario to sell US assets?
So you should take European firm or European institution holding US assets. The problem is most of them are private. I mean, you would need governments to actually impose to them to sell US assets. I don't think that's happening, honestly. That would be unseen. Now, do governments could sell US assets? Yes, they could. Central banks, they could. I'm not sure what would be the impact. We can see already today the dollar is being like the number one victim of what's going on, right? It's the one that's going down.
Yes, in fact, that's possibly one of the things we've not mentioned enough today. You know, the dollar index down by 9 cents of 1%, Bloomberg dollar index down by 3 cents of 1%. Does that sustain, Skylar, briefly?
I don't know. I mean, I'm quite puzzled by the fact that it is happening because it seemed like we'd moved away from that trade. As in, we know that tariffs are worse for European growth than U.S. growth. We know that investors are still buying U.S. assets. We know that hedge ratios have now adjusted. So why have that relationship changed?
A question for the rest of the week. Skylar, thank you very much. Skylar Montgomery-Koenig from our Markets Live team. Michael Masika, our senior EMEA equities strategist. Keeping our focus on Davos today, of course, the UK Chancellor, Rachel Reeves, will be speaking to Bloomberg. 2:30 p.m. UK time. That is it for the opening trade. The Pulse is up next.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse, live from the World Economic Forum here in Davos, where President Trump says he will hold talks over Greenland after threatening new tariffs on European countries getting in his way. France has pushed back most forcefully. Donald Trump has threatened 200% tariffs on champagne after President Macron declined a seat on the board of Peace for Gaza. If that wasn't enough, there's a global bond sell-off with Japanese yields hitting a record on concern over plans to cut food taxes. So the French president, among some of the speakers here in Davos, will be hearing from the UK Chancellor, China's Vice Premier, the chief executives of the New York Stock Exchange, and Anthropic this week as well. We also have some great guests coming up on the program, including Ian Bremmer, president of Eurasia Group, the Nigerian finance minister, and then chief executives of pharma giants Merck and Novartis. First thing is first, though, we're seeing a sell-off in equities. So let's get to the markets. A sell-off in equities that seem to be extending the standoff between the U.S. and Europe over control of Greenland. We saw also a meltdown in Japanese long-term bonds with yield jumping, accelerating that sell-off, putting pressure on debt markets everywhere. And then, look, I'm also looking at demand for safe havens. Those are surging, sending gold and silver to record highs as sentiment is definitely deteriorating. Now, here in Davos, speaking earlier, the Treasury Secretary, Scott Bessent, was adamant that the Greenland issue would not escalate and dismissed the idea that Europe could possibly dump U.S. treasuries.
This is a false narrative that there is no talk in European governments. This was a report written by Deutsche Bank that this could happen. The media has latched onto this. I think it is a completely false narrative. It defies any logic, and I could not disagree more strongly on that.
All right, that was Treasury Secretary Bessent. Just a couple of meters from here, with me now, Ian Bremmer, president of Eurasia Group, and Chad Thomas, Bloomberg's executive editor for Europe. So thank you both for joining us. Ian, we just heard the Treasury Secretary. I don't know whether he's trying to walk down some of the antagonizing things that Trump is saying. Is there a way out of Greenland?
If Bessent were president, I think that he'd be building a lot of confidence with the Europeans with that statement. But when he says it's a false narrative, does that mean when President Trump announces that there are tariffs that are going to hit these European countries on February 1st, which is like a week from now, that was a false narrative? I mean, look, I do know that Marco Rubio has been working assiduously to try to find a way to square the circle on Greenland. Is there a 100-year lease, for example, for Denmark? Is there a way that the Americans would have veto authority over some of what Greenland defense measures, security measures would be, but they wouldn't actually get ownership, which is the Danish red line and the European red line. But the point is that Trump has accepted none of those things. Right. And ultimately, the American people did not vote for Bessent. They didn't vote for Rubio.
Chad, I don't understand what the red line is for Europeans, because they're talking tough, but there's nothing to back it up. So what could they actually do?
Well, that is the real question here. Will the Europeans back up some of the tough language that they have been using with real action? Of course, they could do something when it comes to counter tariffs. They have that option. They could go even further with some of the tougher measures that they could implement at the European level. But so far, they haven't done anything other than talk. And in some cases, you had Friedrich Merz, the German chancellor, yesterday saying, wait a minute, let's be careful here. Germany, of course, very dependent on exports to the U.S.
They're not talking as one. Why not?
Well, they aren't one. Europe is not a state. The United States is. China is. When Donald Trump tried to get the Chinese to back down on tariffs, of course, the Chinese backed Trump right into a corner, and Trump had to negotiate. But he thinks that he can push the Europeans around, and so far he's right. Now, there has been talk of this anti-coercion instrument that many Europeans say that they will implement. Macron, in particular, the Italians have said not yet, we want to talk. Starmer has said not yet, we want to talk. Ursula von der Leyen is going to be addressing the forum shortly, and she has, in my view, neither the temperament, personally, nor the institutional capacity to hit the Americans back.
To Ian's point, we had a story just yesterday where we were speaking to many sources within the European Commission, within the European Union, saying they want von der Leyen to be more forceful, and that Europe needs to come up with a response, and so far they're not seeing that.
Yeah, but so my thinking is, why, is it because they're afraid that this escalates and then we go to actually a war?
No.
Or do they try and see whether if they play the long game, Trump will just forget and get onto something else?
It's mostly because they aren't dealing from the same set of interests. I mean, the Nordic countries believe this is urgent and that this could break NATO, and I think there are some Europeans that support them on that. The Baltics do, the Poles do. I think that France does, but ultimately the Italians don't, and a lot of other Europeans do
why?
not.
Because they think they can speak to Trump? Because actually the Prime Minister Meloni has a good relationship with him.
Because in part it doesn't matter that much to them individually. I think that is a big part of the issue here. National security does not mean the same thing when you talk to all of these different European leaders.
Well, and I think when you say, who has a line into Trump, Alexander Stubb, the Finnish president, thought he had a line into Trump and was speaking to him regularly. They're one of the ones who got slapped with these tariffs now because they have been backing Denmark. So who really has a line into him?
What's going to happen here is that the Europeans are ultimately going to see that they're divided. That this should be the one issue. It should be the crisis they want, because Americans do not support Trump on Greenland by a large majority. Right. Americans do ultimately have a sense of fairness, and they understand that the Americans are treating the Danes as a bully, that they are, this is purely for Trump's ego. It's not a national security matter that could be resolved by the Danes very easily. He has refused to negotiate with the Danes on that issue. Trump says we've been working for 20 years. This wasn't an issue for Trump. When he was president for 4 years, he had the opportunity to move it. So the question is, what do you do when the interests of the United States president actually diverge from the interests of the United States? Well, and that is a real issue on Greenland.
Ian, do Republican lawmakers, for the most part, are not happy about this? Do they step in? I mean, there's still a Congress.
There is a congressional delegation that is here. It is a bipartisan congressional delegation. There were several Republicans I spoke with yesterday morning. They clearly are not happy. They were in Denmark, showing their support for one of America's most steadfast allies, fighting side by side and dying just the same number per capita in Afghanistan as the Americans did. But for President Trump, that does not matter. It does not matter. And if you are European, you feel like the United States is treating you with utter contempt. Right. They're treating you worse than they're treating the Chinese, worse than they're treating the Russians. Why would they do that? And the answer is because they can. So unless the Europeans decide that they're going to show that there will be consequences for President Trump directly for treating them with contempt, he will continue to.
Consequences are messy, but we're talking about possibly selling U.S. treasuries from pension funds. I mean, is that feasible? Is there any appetite for that?
There is some conversations we hear going on among some of the pension funds, like do they divest from U.S. assets over this, in particular in Denmark, but whether they really do that or not, that certainly remains to be seen. We had Besson saying this morning that he believes that's a false narrative. I've also been thinking about the fallout in the Nordic countries. They have been so pro-American, not just from a political point of view, but culturally as well. That's absolutely changing now. You look at the protests that have been taking place across Denmark last weekend. That's unheard of.
Permanent damage is being done to the United States and its relationships with its friends around the world. Mark Carney, Prime Minister of Canada, has just come to Davos, returning from a trip to Beijing, where he has developed a strategic partnership that will bring Chinese automobiles into Canada. Why? Because they no longer feel they can trust their supply chain with American automotive manufacturer. Why are they going to be working with Chinese tech firms to a greater degree? Because they had done America's bidding on Huawei. It got them in trouble, and now they feel like they can't trust the Americans. This is America's closest ally. You think the Europeans aren't going to respond?
You see something happening similar in Germany with the German Chancellor Friedrich Merz. He had initially wanted to take a very tough stand with China. He's now planning to go to China. They just announced new incentives for automobiles. They're going to allow Chinese cars in as part of that. So it's happening in many countries.
But it was interesting for Canada that actually President Trump wasn't against that too much. I think he gave it almost like a blessing in disguise.
Why they're doing it.
Right?
That's right.
But do they buy defense from China? I mean, there's
not
buying,
defense,
but there's buying a little bit. But you actually need the real stuff.
But the Canadians are going to be stepping up their defense purchasing, and over time they're going to do a lot more to actually integrate with the Europeans as opposed to the United States. Right. The long-term implication of the U.S. will continue to be the most important trading partner for Canada. The U.S. will, on the other hand, be doing less with Canada than it used to. And when they build that infrastructure out, that is permanent. That's a change.
Will the U.S. get Greenland?
Get Greenland? I think the answer is no, but I think the question is how much damage is going to be done to the relationship before that becomes evident. And right now, we're in an escalation mode. Is Trump going to use Davos to back down, or does he need to actually see that this plays out more badly for him over time?
I mean, he did last year at the NATO summit. Actually, it went off much better than many people had expected. So could he show up in Davos, to Ian's point, and actually negotiate with people? Possibly. It depends on which Trump shows up.
But now he's also he's going after the UK for something, with one of the islands.
For giving up the Chagos Islands. He already said he supported it. That's right.
Right.
So, yeah, well, he changes his mind. Mindset? Well, I mean, ask Marjorie Taylor Greene. I mean, I hate to bring her up, but I mean, the fact is that, he had one position on the Epstein files and she supported it. Then he changed his mind. And MAGA is whatever Trump says MAGA is at the moment, right? It is not an ideological consistency. It is you must be loyal to Trump. And if Trump changes his mind, as he does, you support what he has changed his mind to.
Where are the Republicans in this?
I would say that the Republicans continue to publicly support Trump on virtually every issue. And that is likely to continue to be true until the Democrats take the House in the midterms, or until there is a major crisis. And either of those things can happen, in the future.
And the Democrats?
The Democrats still are leaderless, and they still are very unpopular. But there's no question that at this point they see that the midterm elections are going to be mostly about the incumbent, and in that regard they feel better about taking some momentum.
I want to ask you about Japan in a second, but do we know who President Trump is meeting whilst he's here?
We don't know for sure. He said, of course, this morning that he wants to have a number of meetings with people over Greenland. We believe he'll meet with Zelensky, the Ukrainian president. Of course, we haven't been talking about Ukraine, and actually, Stubb, the Finnish president, was saying this is what we should be talking about while we're here, not Greenland, but what's going to happen with Ukraine. But that has really been pushed off the agenda for many people.
Good news for Putin.
I mean, this is good news for Putin.
Of course it is. Yeah.
But he's also invited him on the Gaza Peace Board. So again, unclear what that relationship looks like.
Also unclear the Gaza Peace Board is the Gaza Peace Board. I mean, if you read the charter, it sounds like it's something that Trump is intending to be, sort of his group of leaders that are going to talk about international issues more broadly, but apparently not with Macron.
Could I just a question, what does Trump want? Does he want to win? Does he want to see that or show the world that he's won on everything?
Well, he has said that the Donroe Doctrine is all about, sort of the backyard will be a top priority. Venezuela was a big win that clearly empowered him. Yeah. But at home, what he wants is very clear. He wants an end of checks and balances on the executive. And that means both complete loyalty within his administration. Yeah. It means complete loyalty within the administrative state. And it also means doing everything possible to make the judiciary less independent and more aligned with him.
Your take on Japan, I mean, there's big market moves. I'm not going to ask you to talk about the markets, but when you look at the prime minister, she was doing very well in the polls. She called an election. Could this backfire?
Well, it could backfire, but she called an election because her party, the Liberal Democratic Party, is underwater in the polls, and her approval ratings are around 70%.
Right.
And I don't think that a sudden spike in bond yields is going to suddenly take away the fact that she is really considered much more independent. She's outside of all these political clans in the LDP, all of whom had come from leaders and leaders and leaders in their families. She's a complete outsider. She's the first female prime minister. She's talking tough on Taiwan. She wants to focus on growth. And she just started. So ultimately, calling for near-term elections was the right move for her, even though there's a possibility that's a risky move.
So this market volatility, voters will look through it.
Japanese voters? I think Japanese voters are supporting her at this point, yes.
Okay, thank you both for joining us. Ian Bremmer, president of the Eurasia Group, and Chad Thomas, Bloomberg's executive editor for Europe. Well, that's certainly interesting to get us started. Coming up, inflation in Nigeria eases, coming down from a high of more than 30%. We'll discuss the outlook for rate cuts with Nigeria's finance minister. That's next, and this is Bloomberg.
week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jelana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility. There's still room to maneuver. Reduce the opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. This week, live from the Alpine Mountains of Switzerland, is the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate responsible AI deployment, economic expansion, and geopolitical tensions. Tune in for daily coverage all week. Context changes everything.
Welcome back to The Pulse, everyone, live from Davos. Now, there are signs that fiscal reforms in Nigeria are taking effect, with price rises slowing, revenue beginning to improve, inflation hitting around 30% in 2024, leading to deadly protests as food prices rocketed. Well, with us now, Wale Edun, Nigeria's finance minister. Minister, thank you so much for joining us. I have many, many questions on Nigeria, but it's very clear that there is one show in town. It's the Trump administration, what to do with Greenland, with tariffs, and some of the threats that we've heard from them. Do you worry about the effect this has on the world economy, including your economy?
Certainly, because with trade, normally countries like Nigeria, emerging markets, can expect to benefit from growing trade, which will lead to increased output. So in a situation where the world is fragmenting, where there's a move back from multilateralism and from world trade at the global level, a move back from globalization, we worry that that will lead to less trade, less growth, and of course, less opportunity for countries such as ours and less investment. And that, at the end of the day, leads to a society in which you have less growth.
I mean, do you worry about an imperialist America also when it comes to oil facilities and things like that? Or should we not worry about not be too alarmist and just try and stay the course?
We try to be positive and look at it that as a country that has resources, that has critical minerals, maybe we'll be asked to do a transaction that will be mutually beneficial. That's the way we look at it.
Minister, talk to me a little bit about your government borrowings plan for this year, considering the wider budget deficit projected for 2026.
Yes, on paper we have a wider budget deficit because we've got the approval of the National Assembly of Nigeria, the Parliament of Nigeria, but actually the commitment of President Bola Ahmed Tinubu under his renewed hope agenda at the stage we've got to now, after removing major distortions, after stabilizing the economy, is to consolidate and, in fact, to rely less on debt and to try and drive investment. We're here in Davos to tell the Nigerian story and to show how investable Nigeria is now that we have a stable macroeconomic environment.
Are you planning any further Eurobond issuance? Or other issuances?
We have the latitude to do it, but as you know, if you want to go to the market, first of all, the market has to be receptive. Yeah. You yourself have to be within your guidelines and your rules and regulations for borrowing, your margins for borrowing, and of course, the timing has to be right. So we'll see down the road what will happen in that area.
But could we expect something big on Eurobonds this year, or is the appetite not there?
We're hoping to rely less on borrowing, but we'll see what happens there. We have the latitude to come to the market. We were very well received the last time we went to the market, but honestly, our emphasis is on investment and particularly driving domestic investment, increasing domestic savings for investment in the Nigerian economy in order to grow it.
Minister, Nigeria's debt-to-revenue ratio remains amongst the world's highest, actually, the world's worst, despite recent reforms. So what is the government doing to correct that?
Well, that's the point. The issue is now to focus on revenue, focus on domestic resource mobilization. As you know, we have a tax reform regime that is coming into place, 4 tax acts that, apart from being pro-poor, are meant to help increase the tax-to-GDP ratio from quite a low 13% now to drive it up to about 18% in the nearest future. In addition, we have automation, application of technology to drive internal revenue of government, block leakages and loopholes, which a manual system has engendered. And as I say, in addition, we are looking to bring in private sector funding. The private sector is 90% of the GDP, and we want, under the regime that we have now, under the improved incentives that we have now, that Nigerians consume less and save more and invest, as well as the diaspora Nigerians and indeed foreign investors. We're looking to places like the Middle East and other areas that are cash rich and looking for good investments.
Minister, how much time does that give you, actually? I don't know whether there's a threshold of debt where you think you might need assistance from the IMF.
Well, we're hoping that what we are putting in place is immediate. We are in major discussions with foreign direct investors. We have just signed a CEPA, a comprehensive economic partnership agreement with UAE, and we're hoping that this effort allows us to bridge that gap and to bring things into balance fiscally, such that we can rely on our own resources more than the multilateral institutions, who, as you know, are always there. But we are in an environment where multilateralism as a whole is receding. So we're looking to rely on our own resources, including the regional market of ECOWAS and the continental market of the African Continental Free Trade Area.
And you're confident that this will happen?
We are optimistic and we are determined, and we'll give it our best shot. And as you say, we need to get better fiscal balance quickly, and that is our aim.
Minister, going back to the IMF, is there a threshold? Is there a number in your head in debt to revenue that actually you start being very nervous?
Not at the moment. Not at the moment. The idea is just to be making sure that we bring the figure down from where it is now.
Is there anything that the IMF wanted you to do that you've resisted so far?
I think when we're in discussions with our trusted partners, the IMF, the World Bank, what they look at what President Bola Ahmed and Tinubu has managed to do in 2.5 years. Nobody would not reasonably put that down as a condition. So he has gone so far, he has done so much to correct the distortions of the past and to bring back investor confidence. If you look at the reserves, you look at the inflation rate, if you look at the stable exchange rate, you can see. And if you look at the growth in the first half of 2023, 2-point-something%. Now 4 point in the first half of 2025. Sorry, 4.23%. So that is a trajectory which we look to maintain, and we know that will take us to the kind of growth that will lift millions of Nigerians out of poverty by creating jobs for them.
Okay. Minister, I want to ask you about under the new regime, what do you see the tax to GDP ratio being?
Well, the aim in the short term is to get it up to 18% of GDP, and of course to get government spending, the amount of money that government has available to put into social service and infrastructure, way over 20%.
What are you most looking forward to in Davos? I know, again, a lot of people are anxious. I don't know whether you meet with some of the Trump administration, there's a big delegation from the U.S., or whether you're focusing on other parts of the world.
I think that anxiety is created by uncertainty. There's less predictability about the world order. There's less predictability about the import regime that one will be faced with. And so that is natural. But we are here optimistically telling a story of credible macroeconomic reform, which we intend to maintain the course. And of course, we're here to talk to investors, to show them and to convince them that Nigeria is investable. We have a large domestic market. We have the resources, natural resources, and we have an improved investment environment. We have critical minerals. We are able to do a deal.
Yeah, have you approached the U.S. about possibly doing a deal, or are there any discussions going on that?
We are approaching the world, and you must also remember that in terms of value added, we now have 650,000 barrels a day that were normally being exported crude, raw, and that are now being refined into petroleum products as well as into other petrochemical products, so that we are back on that road to industrialization. That is what we have to offer.
Minister, it's very clear that last year the economy managed actually with the tariffs and trade uncertainty, largely because a lot of countries did not retaliate. Could 2026 be different?
Well, we are there to find out, and we are hopeful that there will be a pullback from fragmentation, and that there will be more predictability, more certainty, and more multilateralism.
Okay, well, Mr. Minister Wale Edun, thank you so much. That was, of course, a Nigerian finance minister with a tone of optimism for the future, despite all of the uncertainty out there. Coming up, we discuss what...
What's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Welcome back to The Pulse, everyone. We're live from Davos. Now, President Trump has hit out at the French leader, Emmanuel Macron, for rejecting his invitation to join a proposed board of peace for Gaza, suggesting he could impose a 200% tariff on champagne. France, Germany, and the UK have all responded to President Trump's threat of new tariffs on European nations over their support for Greenland. Well, Brendan Murray, who leads Bloomberg's trade coverage, joins us now. Brendan, how are the markets reacting? And if imposed, what could they mean for Europe's economies?
Yeah, exactly. So the markets don't like the fact that we could be headed back to a transatlantic trade war. France has been one of the strongest countries to come out against the latest tariff threat from President Trump, saying that the European Union should use its strongest weapons to retaliate. We heard Treasury Secretary Bessent this morning say he didn't specify Europe, but he said what's in your best interest is to not retaliate and to just go along with the trade deal that the U.S. has negotiated with you. Well, the Europeans are looking at that and saying, yeah, fine, we didn't retaliate last time, but all it's getting us is more tariffs. So we're at this situation where neither side wants to make the next move, and it's in neither side's best interest to get into a trade war in a relationship that's among the biggest trading relationships in the world.
What options, Brendan, are available for Europe right now?
Well, they have a list of about $100 billion worth of American goods that they could slap tariffs on. They also have this anti-coercion instrument that they could deploy against U.S. companies, digital services companies, tech companies. That's really sort of the bazooka that they'd only bring out as a last resort. It seems that they're trying to give diplomacy one last chance, and we'll see it play out in Davos over the next few days, where President Trump wants to meet with some of these leaders and try to hammer out some sort of path forward with Greenland in particular, but with the U.S.-European relationship more broadly.
Brendan, thanks so much. Brendan Murray, who leads Bloomberg's trade coverage there. Now, despite the tariff and trade uncertainty, Germany's Merck has been working to revive growth across its three main divisions: healthcare, life science, and electronics, through acquisitions and stricter cost controls. A company which capitalized on the pandemic by supplying COVID tests, therapies, and vaccines is now seeking to build out its drug pipeline in an attempt to diversify. Well, joining us now is Belen Carrillo, Chief Executive of Germany's Merck. Thank you for joining us. There's quite a lot going on right now in Davos. We thought we were going to have a conversation on AI, but certainly trade tariffs and threats are back on the agenda. We'll get on to Merck in a second, but how are you living through this? There's so much anxiousness out there. What stance should the Europeans take?
I think at this time, the only thing we can do is to really continue to anticipate what is coming towards us. And we have been extremely active in the last few years, preparing for different scenarios, in particular the trade restrictions through our region-to-region approach. So we feel we are very well prepared. As you know, we are a company, a very resilient company, and we are confident that being very focused on the U.S., having our biggest percentage of our workforce as a very extensive manufacturing footprint, we will be able to collaborate with the U.S. administration and contribute to their goals.
I mean, what's your thinking on the U.S. international reference pricing approach? Are they too aggressive?
Look, you know, first of all, I have to say that looking for affordability of medicines is very legitimate, you know, and patients need to access innovation, and that is really the magic, you know, affordability and rewarding innovation. This is what we advocate for. So we are collaborating with the U.S. administration to be able to find the right balance. We recently signed an agreement to supply our fertility franchise and give better access to patients in the U.S. that would love to have a family the chance to receive IVF. at an affordable price, and we will continue to speak to the U.S. administration to basically take the letter of intent to a formal agreement.
Would Merck ever consider limiting launches in lower price markets, or do you see other solutions?
So,
would you ever consider actually not launching if the price is too low in certain markets?
Look, our mission as a company is to provide innovation to patients. So the only thing that we take into consideration is to provide innovation to the markets in which we operate, and we will continue to do so.
You've repeatedly said that Merck is looking for a potentially deal, maybe a big deal in life sciences, but that valuations have been too high. Is that changing a little bit?
You see, I mean, we have seen the life science markets being very volatile in recent years, and of course, the market cap of the companies have oscillated up and down. Prices are more moderate.
Okay.
Nevertheless, the seller's expectation continues to be very high. So we are really driving our organic portfolio. Right. We are super strong in process solutions. We have great momentum, and we are not in a hurry. It will come when we believe it's the right time, at the right price for the right target.
But is it mainly about price, so that you've identified areas or the companies, but it's the price?
No, it's not. It's not about price. It's, you know, for many years our M&A strategy was aiming to build the scale. Now we have a leadership position in life science, and we want to look for those companies which are going to fill innovation gaps and will give us a sustainable innovation model to the future.
I know parts of your life science unit appear to be stabilizing after a difficult destocking period. There's also a big wave of anti-vaccines in the U.S. Could that impact actually some of the uptake?
We have really put the overstocking that we have seen post-COVID, mainly related to the supply chain disruption during the COVID times. We have put it behind. Definitely we see, as I mentioned already, very, very strong momentum in order intake, which is growing double-digit quarter after quarter, as we have communicated recently. Our book-to-bill is very healthy. All the leading indicators are moving in the right direction. We are very confident.
What are you most optimistic about this year?
Look, you know, we continue to focus on our 3 pillars of growth. So semiconductors, driven by the booming of AI. We are at the center of capturing that opportunity. Our recent acquisition of SpringWorks is giving us a fantastic chance to grow our presence in rare diseases, and now we are already accelerating the launch in the US, but also initiating the launches in Europe with very promising data in Germany, in the early times in Germany, and of course process solutions. I mentioned already. We are really excited with the momentum we gained in that market.
I mean, life sciences, but again, actually, you're invested in sectors that are changing, that there's quite a lot of disruption. Is it faster? Is this disruption faster than you ever thought it would be?
Look, you know, we play in very highly attractive end markets, you know, and disruption and change is part of our business. The main topic at Davos this year is going to be geopolitics and AI once again. And of course, this is asking for us as leaders shaping the companies to be able to deal with those disruptions, and this is exactly what we have been doing in the last 5 to 10 years.
What do you see as the biggest challenge for Merck in its next phase of growth?
Our next phase of growth is very, very well anchored in our 3 growth pillars, and obviously the challenge, the constant challenge that we will have to deal with is improving our R&D productivity to be able to bring innovation to customer and patients.
Okay, thank you so much for joining us. That was Belén Carrillo, the Chief Executive of Germany's Merck. Now, beyond trade and geopolitics, AI also a big part of the Davos agenda and one of the core themes. Earlier, we spoke to Laila Ibrahim, the Chief Operating Officer at Google DeepMind.
we've been really focused on continuing to make Gemini a really powerful model, bringing in capabilities that we think can unlock human potential. And code was one of the areas that we really focused on in the past year, and really pleased with the progress we've seen with Gemini 3, which was announced at the end of last year.
So what's next for Gemini? Are you hiring more people to work on it?
Oh, and we're always looking at our talent. And so on Gemini specifically, we're continuing to think about what are the capabilities that will continue to increase the making it valuable for users. So things like, how do we continue to make it more factual? How do we help with things like reasoning, concepts, memory? We really believe that we could have a personal assistant, but in order to do so, there are a lot of areas that we need to work on, such as privacy, as well as how do you make sure that you have memory. So the AI understands me and my preferences and my needs, and I can use it as a tool as part of my everyday work. And what that requires is really understanding more of kind of the world model, the context around us in our daily lives.
Is there anything that you've put on the back burner because of your big focus on Gemini?
Well, an organization like DeepMind, I think one of the extraordinary things is that we have been able to keep the breadth of portfolio. So when you look at last year, not only did we have Gemini and VO, progress in our video generation, audio, imagery, but also things like Weather Next 2, being able to predict weather forecasts, like 50 different paths of a hurricane for the next 15 days, which really, if you think about it, can really help with emergency preparedness. We've also made significant progress in some of our materials discovery to help with superconductors, to power supercomputers, or next generation batteries to help with electric vehicles. We've continued to advance work in SynthID, our watermarking technology, ancient text to help us understand the past. I think there's so much exciting work that's happening.
Laila Ibrahim there, the Chief Operating Officer of Google DeepMind, speaking to me a little bit earlier. Now, coming up, we discuss drug pricing under the Trump administration and the outlook for pharma with Vaz Narasimhan, the Chief Executive of Novartis. That's next, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Welcome back to The Pulse, everyone, live from Davos. Now let's take you live to the UK Parliament, where Mike Johnson, the Speaker of the US House of Representatives, is making an address to mark the 250th anniversary of the United States. That's after President Trump criticized the UK Prime Minister for his plans to return sovereignty to Diego Garcia, an island that houses a crucial military base to Mauritius. So this is important. Let's take a listen.
Well, and Lady Catherine graciously hosted for us. It was not lost on me that there at my table were items of silverware older than my country. Puts it in perspective. But this year in particular, we remember just how far we really have come, how our nations have evolved and grown and strengthened in so many ways together. America's founders embarked on what was a radical experiment, of course, a government of, by, and for the people, ruled by laws and based on the self-evident truth that all men are created equal and free. That experiment transformed 13 disparate, distant colonies from the world's largest empire into what became the world's freest and most successful self-government in human history. For Americans, this year is not simply a celebration, it is an invitation to come together and to ask what we are doing in our own time to preserve and fortify that experiment and all of the blessings of liberty and opportunity and security that we enjoy today, and frankly, sometimes too often take for granted. We have a stewardship obligation to maintain these blessings, and all of us in the West, all of us together, are facing real challenges today that we must acknowledge and confront, and we do that best together. Across the pond, Congress and the Trump administration have been working very hard. We're trying to usher in a new golden age for our country, as we say. We're marshaling every resource we have to make America safer and stronger and more prosperous than ever before. And I'm very bullish on the prospects of doing that. We must do this because we know those hostile to the West and to our shared values are engaging in increasingly sophisticated forms of subversion and espionage. We see China, Russia, and Iran grow more aggressive and emboldened as they intensify their efforts to exert economic, political, and military influence around the world. We see a callous disregard for basic human rights, new provocations, and even the theft of intellectual property on a scale like we have never seen before. Clearly, President Trump is taking seriously the modern and dynamic threats that China and Russia pose to our global security, especially in focus the last few days as it relates to the Arctic. And while we can have thoughtful debate about, among our friends about how best to counter these threats, we all certainly agree they must be countered. We ignore these threats at our peril. And I want to hasten to express our gratitude to the UK and to all of you for joining us in some of our most recent actions to deter these hostile regimes, including the recent seizure of a black market vessel seeking to circumvent oil sanctions. That was a big help to us. That kind of open dialogue and partnership is a great example of how we can work together to ensure our collective defense around the world. It is an objective and obvious truth that a strong America is good for the entire world, and a strong UK is as well. At the same time, it's also obvious that we have to take care of our own houses, so to speak, before we take care of the neighborhood. And let's be honest, among friends here, in both of our nations, there is a need today to fortify our houses against internal challenges as well. In the West, if we make an honest assessment, we must acknowledge that our long-term prosperity and security are currently being undermined by, let's call it a crisis of self-doubt. It's been developing now for years. Elite institutions today tell the young and impressionable that our story is one of oppression and hypocrisy and failure. Our brightest minds are too often taught to view our history only through the lens of its sins. And we see the work of international organizations and transnational bodies hinder the very spirit of creativity and industriousness and daring that our nations were built upon. We have faced this in America just as you have here, a truly menacing skepticism towards history and our national institutions. And it's even come to the point where even great heroes like Sir Winston Churchill are questioned for their legacy. What has taken hold is a mindset that defines itself not by what it loves and seeks to preserve, but instead by what it condemns and seeks to tear down. And this growing disaffection we see, particularly among our younger citizens, is a serious threat to the health of both our nations. If the next generation is never exposed to the deeper wisdom of the Western world, or the enduring tradition of the British Parliament, or the genius of America's model of Republican self-government, then why would they feel any obligation to defend or preserve them? Fortunately, history teaches us an important lesson. Just over half a century after American...
Mike Johnson, the Speaker of the U.S. House of Representatives, making an address in the U.K. Parliament at a time, of course, of heightened tensions over security issues, including Greenland, and Diego Garcia. Novartis, one of the big pharmaceutical firms to agree a deal with the White House on drug pricing to bring them in line with other countries. Now, the company will also be keeping a close eye on the trade and tariff situation as President Trump, again, ramps up threats. Now, let's discuss all of this with the Chief Executive of Novartis, Vas Narasimhan. Thank you, Vas, for joining us. Look, there's a lot going on. We were just hearing from the House Speaker. We heard from Scott Bessent, the Treasury Secretary, trying to urge calm amid this growing transatlantic rift. But are things going to get worse? You were kind of also at some point with, other companies in the firing line. I don't know how we should be taking this.
What we've tried to do, Francine, is, really future-proof our business. We made these $23 billion investment commitment, and we've been making progress on that. And what that allows us to do is already progress almost completely to making our medicines in the U.S. for the U.S. So even if there are shifts in the tariff landscape, we feel like we can weather that. There'll be no impact on our guidance or our outlook, so we feel very good about that. And I think, importantly, part of the agreements that we struck as well should exempt us from these tariffs, though, of course, that also is always an open question.
And Vas, this is basically, the so-called most favored nation. What does this agreement mean in concrete terms for your portfolio, but also investment strategy going forward?
I think probably the biggest impact is going to be on future launches. I mean, there are other elements to the agreement, but I would say those are smaller. But the commitment now we've made to the U.S. government is that our prices in the U.S. will not be below the net price we have in the second lowest price in 8 countries, 8 benchmark countries. And what that in effect means is we cannot launch in those 8 countries unless the prices are comparable. Be delayed launches, might be no launches. And I think this is a real wake-up call for those markets, which are primarily in Europe, but also Japan and Canada, that they need to better value innovation if they want these medicines to come, and then future investments in R&D and manufacturing. This is a pretty seismic shift in the structure of our industry.
I mean, you've called for a lot of governments, including Switzerland, but also, some others in Europe, France, to step up their support for life sciences. What does the industry need right now?
Look, when you look at investment in innovative medicine spend as a percent of GDP per capita, Europe is about half of the U.S., but it's a closable gap. When you look at the kind of investments these countries make in subsidies of other industries, non-high-tech, high-innovative industries, if you want to attract industries like ours, properly value our medicines, properly value the impact they have on patients. If you can do that, then of course we'll stay, we'll keep investing. But I think it's a wake-up call, and what I worry, Francine, is it's going to take this to become a crisis, multiple medicines not launching across the industry, patients not getting the medicines they need, and then we're going to have the response only then.
Yeah, you also, I think, cut 550 jobs from a factory in Switzerland. Is this an early warning sign of things that could come?
Yeah, I think that was more of a normal, workforce realignment, but I think that the bigger topic will be when you think about future investment, rather than expanding plants in Europe, we've now put up sites in the U.S. We have sites in China. I think the bigger issue is now we're having really a balkanization, so to speak, of the global manufacturing network. And so if Europe wants to attract investment, it has to step up. It can't rely on the U.S. Market for building out European factories.
Why is it so hard for Europe to do things differently? I don't know whether it's competition, it's growth. We had the Draghi report. What's the problem?
Look, I think European governments have multiple challenges. The fiscal challenge of trying to respond from a military standpoint, from an energy standpoint. But I also think there's a lot of holding on to old industries and old subsidies. And I think as long as you want to spend your money subsidizing, things like farming, like, other sectors that maybe aren't as high-tech and high innovation as ours, that's a choice. And I think now that choice is really in front of leaders. If they want high-tech industries, they're going to have to invest, reward innovation, and then you really attract the investment going forward.
Are you looking to buy anything this year?
Look, last year we were the #1 company in terms of deal making in the sector. We were very active. Most notably, our proposed acquisition of Avidity Biosciences for $12 billion. We'll continue to be active this year as well. You know, when we think about growing a company of our scale, getting to be now over 60 billion of sales, aspiring to get to 70 or 80 billion dollars of sales in the next decade, we need external innovation to complement our internal innovation engine. So absolutely, we'll be active in the deal making world.
I mean, do you have a treasure trove? How much do you have to spend? And how are valuations?
Well, I mean, from a finance standpoint, we're in a very good position. Strong free cash flow, low debt burden. So we're in a position where we're not capital constrained. It's more, I think, the science, and does the science support, you know, what we want to do. You know, I think valuations have rebounded now in the biotech sector. So I think there is no more of the opportunity to buy the dip, so to speak. But that's okay. I mean, we're more driven by, is this an innovation that could really drive long-term value creation?
But this is not your first Davos. I know I've seen you here many times. It feels
my 9th.
different. It's your 9th Davos, and every year we say this is a turning point. This is the critical year for world affairs. I mean, does this year feel different because of the Trump administration being here and talking tough? I
mean, it does feel different in so much as a lot of the action is happening here. Like we're kind of in the middle of it. We're in the middle of all of it, all these different topics. So in that sense, it's very, very exciting. But I think it's also important to just keep the long view. I mean, if I think about an industry like ours, we have 10-year innovation cycles. That's 2.5 U.S. presidencies. So I keep telling our people, we need to adapt to these near-term realities, but we can't lose sight of the long-run approach that our company needs to do to win.
Is there a danger that people, including CEOs, are moving too fast or thinking too short-term?
I think there's a danger right now because you can get very reactive in this moment. I think you have to just take a deep breath, see how things play out. You don't want to constrain your company or constrain, you know, your future opportunities by acting too quickly. Even when you think about these MFN agreements, we tried to take months to engineer an agreement we thought we could manage for 10 years, not just trying to win for 3 months.
You've been in charge of Novartis for 10 years?
9th year.
9 years. I mean, what are your personal goals?
Look, right now, I've been super proud. As you know, we were #2 in shareholder return over the last 3 years, strong innovation pipeline. Really, for me now, is how do I set up the company for the next decade, 2030 to 2040, and how do we get all the right innovation and medicines in-house? But it's a great position to be in because it's much more about thinking about the future of medicine and how do we really realize that in our company.
Vas, thank you so much for joining us. Vas Narasimhan there, the Novartis Chief Executive. Coming up tomorrow on The Pulse, we speak to Philip Hildebrand, the BlackRock Vice Chair, the Prime Minister of Qatar, Chief Executive of Commerzbank, and the Bank of Israel Governor. We'll have plenty more, of course, here from Davos, and what we're looking for is to try and understand whether there's an escalation between the US and the EU, or whether what the Treasury Secretary, Scott Bessent, will try and slow down tempers a little bit. Coming up in just a couple of minutes, don't miss our conversations with Filippo Gori, the co-head of global banking at JP Morgan. Up next, Bloomberg Brief.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg. Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He say, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start the Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Tune in to Bloomberg Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Markets on edge, global bonds selling off after a meltdown in Japanese sovereign debt on Takaichi's election pitch. This all as President Trump's tariff threats add to market unease as world leaders gather in Davos. Plus, Treasury Secretary Bessent in Davos says the president could announce his Fed chair pick as soon as next week. But take a look at this market action because it is simply stunning today. We have futures pointed very much lower a few hours before the Tuesday session. Remember, it was a long weekend in the United States. But let's take a look at the bond picture because that's where it's really obvious that there's something going on in this market. This market is very unsettled. That 10-year yield is about to touch 430. Remember, we've been in a 410 to 420 range for the longest time. We're back at levels that we saw last August, September. That 30-year yield is at 493.35, and the 2-10 spread now is back at 70 basis points. It's been many, many weeks since we've seen that kind of a spread. We were all the way down to 60 and below just in recent days. Let's take a look at gold because we're seeing that above $4,700 an ounce. Silver also at a record at 95, and obviously crude not really paying too much attention. The VIX, I want to point out, is above 20. We're going to get to all the reasons why this hour. First, though, let's get to some individual market movers across to London and Chloe Melly. Chloe.
Good morning, Bonnie. It looks like the U.S. stock market is going to follow in the footsteps of this global general sell-off there. And we are seeing some of those big names in the U.S. down in the red this morning. In particular, Western Digital down almost 6% in pre-market trading as we are seeing Trump's tariff threats really spook investors this morning, and also those escalating tensions over Greenland. However, on the other hand, this uncertainty, this tension is good news for miners, and miners are in the green this morning as we are seeing this rush towards safe havens really drive gold and silver, and so we are seeing miners in the green. And finally, we are seeing also a big move in wrapped therapeutics this morning after the British drug maker GSK agreed to buy the company in a deal that is valued at $2.2 billion, and so this will give GSK access to wrapped therapeutics portfolio of treatments for inflammatory diseases, and we are seeing a huge move there, more than 60% in pre-market trading.
Chloe, thank you so much. Chloe Melly there. And coming up this hour, we're live from Davos with Philip O'Gorry, JP Morgan co-head of Global Banking, and ECB Governing Council member François Villeroy. That's later this hour. But first, on this market, stocks selling off across the Atlantic on a standoff over Greenland. Global bonds also sliding following a heavy rout in Japan. Let's bring in Bloomberg MLive's Skylar Montgomery-Cunning for more. Skylar, I guess this started developing in Japan, but it's a whole confluence of events, right? What would you say is behind the Treasury sell-off today?
Yeah, I mean, I think certainly the move there is concentrated around Japan. Now, the issue with Japan is you're having an election come to the fore where the idea is if the ruling party gets more power, so they strengthen their mandate, then they'll do more fiscal spending. Now, debt to GDP in Japan is already the highest across G10. You also have an issue with the duration mismatch in terms of that huge amount of debt is being funded by Japanese investors owning, and Japanese government as well, owning risky assets abroad. So the worry is, as that yield rises, it becomes increasingly fiscally unsustainable. And it brings to the fore questions around debt sustainability globally. So it's not just Japan, it's an issue. As you say, US Treasuries, it's an issue. European government bonds, it's an issue. And I think particularly for US Treasuries, what we need to think about is this idea that you've had a structurally compressed term premium kind of in the 2010s because you had unusually easy monetary policy, QE, very predictable monetary policy as well. And so we're kind of moving structurally higher because we have a more uncertain economic environment, we have greater US Treasury supply, and you also have a flipping bond equity correlation, which means bonds aren't as good a hedge as they used to be. And so you get kind of triggers elsewhere in the world, but it's certainly also a US motivated event in terms of you need a structurally higher term premia and a structurally higher yield.
Exactly. Skylar, thank you so much for all of that context. Skylar Montgomery Koning is there, and you saw the yen move today, one full big figure from 158.60 right down to where it is now, 157.72. All right, let's go to Davos, Switzerland, where Bloomberg's Francine Lacroix is standing by. Francine.
Thank you so much, Vonnie. I'm delighted to be joined by Filippo Gori of JP Morgan. Filippo, thank you for joining us. There's a lot going on. I feel like the world is descending on Davos. There's one show in town, and that's President Trump. I want to ask you about JP Morgan and how you see the year ahead, but how do you see clients behaving or behaving differently given all these new threats on trade?
Thank you very much for having me, Francine. So, as I was saying, I've just finishing a tour that is lasting 3 weeks across Europe and the Middle East and now in Switzerland. And it's definitely interesting, the fact that as we were touring the region, no one asked any question around trade or tariffs. It was one of the main takeaways that we shared with Jamie too, that it seemed that we have moved on and people just want to get on with the business and run the companies and do what they have to do and not have to worry too much about tariffs. Now, they might come back in the spotlight, but I felt there was a more sanguine feeling that it is what it is. Let's just get on with life.
How are you and how is JP Morgan preparing for another big year? Are you hiring more bankers? What areas are you focusing on?
So absolutely. So if you look at what 2025 was from an investment banking standpoint, if we cover that point for a second, it was the second best year in the history from a deal-making standpoint. Notwithstanding that you had 2 months, April and with Liberation Day and October with the government shutdowns where activities did slow down. So the momentum though that you had for the last, I would say, quarter, last 4 months of the year, it definitely seems to be carry on into 2026. And this could be one of the best, if not the best, year for deal making. This is for a variety, I think, of different reasons. Clients are kind of looking around, they realize that financing costs are still exceptionally cheap. Yeah. There is definitely an enormous backlog of transactions that should have happened last year, they're probably moving into this year. The large mega deals are coming back, and therefore we feel that this will be a year important for both IPOs. Probably we're going to see much more. We were expecting those in 2025, but we feel that now 26 is coming back, and M&A too. So yes, we are hiring across the border, in all the sectors, in all the locations.
But Filippo, is there something that could slow down the momentum?
Probably, I would say 3 things. When you speak to clients, the first is what you mentioned at the beginning, geopolitical. The geopolitical winds have been blowing for a long time. At times they blow in other direction, at times they blow in the opposite direction, so people got used to it. Clearly, an escalation could bring a slowdown in that sense. Then there is a lingering fear that you perceive here and there around inflation coming back, or potentially the end of this fantastic credit cycle, which we have had now for the past 15 years or so, and therefore conditions that could materially change under certain scenario, and a lingering fear that, inflation could come back and so on and so forth. And then there is all the usual question that you might have around AI. At what point, all the considerations around valuations, productivity, job losses, and so on and so forth. But barring all of these, which are a big considerations, I still feel the clients, the perception that I had in these 2.5 weeks going around Europe is that people want to get on with their businesses.
I think it's 1 year to the day since President Trump got inaugurated. How are clients feeling about the administration? I know leaders here, European leaders, are under extreme stress. Clients may be different.
I think definitely clients around the world are watching the U.S. economy with a degree at times of envy. Say, how can we be part of that fantastic engine of growth that is the U.S. economy? And from a U.S. standpoint, clearly the perception that the regulation and other things that can impact growth is bringing clients the idea, let's dare to do what maybe would not have been possible years back. I think in Europe, there is more of a sense of, folks, we just need to get going and do what we have to do. And you can see there's going to be probably more consolidation, I think more domestically within European countries. Cross-border is more complicated. In the Middle East, there is definitely a sense of, yes, there are opportunities right now, also for a series of idiosyncratic opportunities and what's happening in the Middle East. And then Asia, it lives through its own rhythm, dictated by Japan, by China, by India, by Australia. And therefore, they are all looking at opportunity for growth also coming from the U.S.
How much, we had a good, actually, earnings season for a lot of the banks, but how much do you worry about a credit cycle downturn?
We always worry. I mean, we are an institution of warriors. We have the warrior number one, warrior number one, who is the Jamie, and he pushes that sense onto all of us, and we need to worry about everything. So, of course, you look at the credit cycle has been benign for so long. Credit spreads are at the tightest, notwithstanding all these considerations. So do you think about it? Yes. Do we see an immediate sense there could be recession in the U.S.? No, that's not.
How do you prepare for it, though?
We always stress every potential outcomes. Jamie wants us to be prepared for any outcome, whether it's higher rates, whether it's stagflation, whether it's inflation, whether it's geopolitical risks. As someone said recently, barring probably an asteroid hitting planet Earth, we try to be prepared for everything.
What makes you worried the most, given all of these potential shocks, risks, models that you play out?
I think I would say markets still tend to price perfection a little bit on everything. So that's a consideration that I have, that there is this sense that everything is going to go well, notwithstanding everything else. So that's a little bit of a worry that I do have.
But could we see a washout, like a big correction, or does the market automatically adjust itself?
Look, if you look at some of the geopolitical things that have taken place at the beginning of the year, starting with Venezuela, markets barely reacted. Now, to some of the latest news, there has been a little bit more of an activity, but I think markets have, clients have become more, they got their head around the volatility, and they just don't overreact anymore.
You have a new special advisory services team. So how are they prioritizing AI, geopolitics, and sustainability?
So they are prioritizing a series of services that we provide clients, not only those, also cyber, our Center for Geopolitics, the Directory Advisory Services, and so on and so forth. The idea is to provide our most important clients with access to the best intelligence that we have on some of these various sectors or topics, and provide them with those services.
Again, I mean, on AI, are you looking at it from, so we talked a little bit about valuations and some of the worries there, but do you talk about it also on how it could change macro economies at a productivity level? Absolutely.
You consider everything. So we are big users of AI. We have around 400 active AI cases that they're currently operating through the company as we speak. So we take from what we learn from our own lessons, what we learn from our clients, and we try to help clients around the world as they make decisions.
Filippo, thank you so much for joining us today.
Francine, thank you for having me.
That was Filippo Gori, co-head of global banking at JP Morgan. With that, I'm going to send it back to you in New York, Vani, and we'll have plenty more from Davos throughout the day. It's going to be busy.
It is, and we're going to be returning to you in just a little bit. Francine, thank you so much. Wonderful interview there. That was Francine Lacroix. Now to other top stories trending on the terminal this morning. U.S. Treasury Secretary Scott Bessent says President Donald Trump could announce his pick for the next Federal Reserve Chair as soon as next week. BlackRock's Rick Reeder and National Economic Council Director Kevin Hassett are among the frontrunners.
We have 4 fantastic candidates. It will be up to the president, and I would imagine that he will have an announcement maybe as early as next week.
Elon Musk's online brawl with Ryanair's CEO is dragging into a second week. The world's richest man has again floated the idea of buying the airline after clashing with Michael O'Leary. Musk posted a poll on X Monday asking if he should purchase Ryanair and, quote, restore Ryan as their rightful ruler. Michael O'Leary called Musk an idiot. And UK firms cut jobs at the fastest pace since 2020, and wage growth eased to its lowest in 3.5 years. Tax data show the number of employees on payrolls falling 43,000 in December. Unemployment, based on the ONS Labour Force survey, held at a near 5-year high of 5.1% in the 3 months through November. Back to our headlines now. President Trump taking a swipe at French President Macron for declining Trump's latest peace initiative.
Well, nobody wants him because he's going to be out of office very soon. So, you know, that's all right. What I'll do is if they feel like Costco, I'll put a 200% tariff on his wines and champagnes, and he'll join.
Joining us now in Brussels is Bloomberg's Oliver Crook. Oliver, give us the backstory. Why was President Trump so put out here?
Yeah, it's hard to sort of keep track with all the tariff threats that are flying around. The latest from President Trump is towards Emmanuel Macron, specifically to France, for a 200% tariff, basically on the French refusal to join the sort of Gaza Peace Board. Basically, you know, they were saying that they did not have quite enough information at this point. They had to sort of decline, and that's a threat that we got from President Trump. We should also say there was some more activity in the relationship between the French and the American president, where Donald Trump, in what seems to be a sort of tradition now before his trips coming to Europe, he was posting screenshots of text messages he got from Mark Rutte and from the president of France, Emmanuel Macron. I'll just read here what he put out, and this is apparently a text from Macron saying, "My friend, we are totally in line on Syria. We can do great things on Iran. I don't understand what you're doing with Greenland. Let's try to build great things. 1, I can set up a G7 meeting after Davos in Paris on Thursday afternoon. I can invite the Ukrainians, the Danish, the Syrians, the Russians in the margins. 2, let's have dinner together in Paris and talk on Thursday before you go back to the United States." So this is exactly what President Trump did last time he came for NATO back in June. He posted these sort of text messages that were sort of bizarre from Mark Rutte very sort of publicly. He did again posted a text message from Mark Rutte. But all this to say that there is a very sort of intense diplomatic effort as embodied by that message from Emmanuel Macron to get some one-on-one time with Donald Trump to try to de-escalate the Greenland situation, to try to build the forums of building understanding at the G7 level. We should also say I think it's pretty interesting that Macron himself was suggesting including the Russians at the margins. I doubt that was really necessarily information that was meant for the public, that was meant for President Trump, which of course Trump posted publicly. But that's sort of the ambition and this sort of feeling going into this Davos meeting where Donald Trump is heading in. If you want to get what Donald Trump's feeling going into the meeting at Davos is, this is the other thing that he posted on Truth Social, which is a picture of him, J.D. Vance, and Marco Rubio, AI generated it seems, with Greenland and the American flag saying U.S. territory established 2026.
Yeah, so, Ollie, I mean, we obviously saw, and they were verified, texts from the French Prime Minister, but in general, how will European leaders approach negotiations this week? They have to be all on some sort of same page, right?
So I think they're going to try to get a feeling in the room and any kind of sort of ambitions that the Trump administration, any kind of possible off-ramp that there might be with Trump. We should say, Vani, in what we've heard over the last couple of weeks, it doesn't really seem that there is an off-ramp with Donald Trump on this issue of Greenland, but they're going to investigate that. Now, again, we may get this G7 meeting in Paris on Thursday afternoon. There is, of course, that emergency meeting by the European Council that has been convened here in Brussels on Thursday evening. And what we'll be watching for there, Vani, and what I think will be very interesting, is trying to see some of the differing views in terms of how the member states of the European Union want to go about this. As we know from the very beginning, Emmanuel Macron has been much more aggressive. He says we should go all in. We should really push back against the United States. We should use the strongest measures that the European Union has. We heard from Friedrich Merz, the Chancellor of Germany, who says, listen, let's keep slightly cooler heads. Let's go about this a little bit more slowly, because of course Germany is much more dependent on the export market in the United States. All of that being said, Vani, I think there is a dawning realization within Europe that basically yesterday it was about getting the trade balance right. Today it's about Greenland. Tomorrow it could be about anything. So the Europeans at a certain point will need to draw a line in the sand. We also heard from Scott Bessent speaking in Davos saying basically his advice to everybody is stay cool, keep calm, let the negotiation go on, and whatever you do, do not retaliate to the United States. But that is going to be the question before European leaders when they assemble here on Thursday evening.
Yeah, exactly. It's a tough one. Oliver, thank you so much. Bloomberg's chief European correspondent there, Oliver Crook. And you mentioned the Treasury Secretary Scott Bessent urging calm as tensions rise over President Trump's ambitions to take over Greenland. Let's have a listen to what he said.
Again, I would say this is the same kind of hysteria that we heard on April 2nd. There was a panic. And what I am urging everyone here to do is sit back, take a deep breath, and let things play out. As I said on April 2nd, the worst thing countries can do is escalate against the United States. Back then, only one country, China, escalated. We ended up in an unfortunate tit for tat in tariff raises. We ended up at 145, 125. Through President Trump's good relations with Party Chair Xi, we have managed to stabilize that relationship and given great certainty. And as far as your question about the additional tariffs, what President Trump is threatening on Greenland is very different than the other trade deals. So I would urge all countries to stick with their trade deals. We have agreed on them, and it does provide great certainty.
That was Treasury Secretary Scott Bessent speaking in Davos in the last few hours, and a lot for the market to digest there. Coming up, the U.S. Justice Department is weighing a rollback of gun regulations. More on that and a look at what else is making headlines in your front page news. Next, this is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Washington Post reporting the Justice Department is considering loosening gun regulations to bolster support from Second Amendment advocates. The changes could include easing restrictions on private gun sales and shipping firearms. The Post says efforts to placate gun rights groups comes as AG Pam Bondi faces criticism for not going far enough in easing firearms restrictions. Next up, the Wall Street Journal leading with Goldman Sachs and its top lawyer's Epstein problem. The extent of Catherine Ruemmler's relationship with Epstein has drawn scrutiny inside Goldman, where Ruemmler is general counsel and a top advisor to CEO David Solomon. Now, Solomon has expressed support for Ruemmler, saying she is an excellent general counsel. And finally, on the front page of the Financial Times, banks in Saudi Arabia borrowing internationally at their fastest pace ever as they rebalance their books after years fueling the kingdom's economy. The FT reports the kingdom now faces tightening liquidity after a decade of massive state spending and is looking for alternative sources of financing, particularly from abroad. All right, let's get to these markets because this is just one of the stunning moves today. It's indicative of what's going on in these markets. There's turbulence and there is just a bunch of unsettling things to traders out there. It all began really in Japan, where Sanae Takaichi proposed pausing the 8% sales tax on food items for 2 years. Now, that could add 5 trillion yen to the debt in Japan, and that sent investors fleeing sovereign debt in Japan. And we had this massive sell-off event, and that caused yields in Japan to rise. As you can see, the Japan 30-year yield is now at 387. It's up about 3 basis points, but earlier that move was about 10 basis points. It filtered into the United States, where you see the 10-year yield very close to 430. We haven't been beyond 420 since last summer, the end of last summer. And we also are seeing the same thing in the European session. I also want to point to gold above $4,700 an ounce as investors look for havens. Silver also at a record. A little bit of selling off in Bitcoin, and the VIX index is above 20. Coming up, we're going to get more from Treasury Secretary Bessent's press conference at Davos. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Markets on edge, global bonds selling off after a meltdown in Japanese sovereign debt on Takaichi's election pitch. That and President Trump's tariff threats adding to market unease as world leaders gather in Davos. Plus, Treasury Secretary Bessent in Davos says the president could announce his Fed chair pick as soon as next week. So let's get to these market moves. We are off our extremes, but as you can see, we are still looking to a very much lower open. NASDAQ 100 futures pointing to an open of almost 2% lower. We were above that earlier, more than 2% of a decline expected at the open. It all started in Japan, where we saw yields absolutely skyrocket by 27 basis points in the session. So let's take a look at U.S. yields, because there was obviously a knock-on effect. So a massive curve steepening. Look at that 30-year yield up almost 10 basis points right now. That 10-year yield almost at 4.30. We were above 4.29 earlier. Just the 2-year yield a little calmer, but it's still many basis points higher than it was at the close of trading on Friday. So that curve, about 70 basis points between the 2s and the 10s at the moment. You're seeing a run into safe havens as well, with gold and silver at records. Gold above $4,700 an ounce. The VIX is above 20, and the yen had a stunning move as well. It started the session very much weaker on the prospect of Takaichi's adding $5 trillion to Japan's debt with her pause on sales tax idea. But of course, also the tariff threats on European countries over Greenland is putting this market completely at ill ease. So this is what your market picture looks like right now, just the macro environment. We'll see if Bessent's comments can calm this market, or if they want to know exactly what he means by why they should stay calm. But for some individual movers now, let's get across to London and Chloe Melly. Chloe.
Good morning, Bonnie. We are seeing a wall of red this morning among those big U.S. tech names, which is part of that global sell-off across equities, of course, due to Trump's tariff threats really spooking investors and those escalating tensions between the US and Europe over Greenland. And so we are seeing all of those really big names in the red this morning, and Western Digital in particular down more than 4% in pre-market trading. Moving on to miners, and there the picture is very different. It is actually all in the green, and that is because we have seen this rush towards the safe havens from investors because of this uncertainty, because of those tensions. And so this is, of course, very beneficial for those miners. And so we are seeing, in particular, critical metals this morning up at more than 9%. And finally, Wrap Therapeutics is up massively this morning after the British drug maker GSK agreed to buy the company in a deal that is valued at $2.2 billion. And so we are seeing a huge move there for Wrap Therapeutics, more than 60% in pre-market trading.
Chloe, thank you so much. And I do want to bring you some lines now from Ursula von der Leyen. It is, in fact, what looks to be the European response to President Trump's threats. She says on the US trade pact that has already been agreed, quote, a deal is a deal. Then she goes on to talk about the Greenland response. She says it will be unflinching and united and also proportional. So Europe is suggesting a proportional response to President Trump's threat to increase tariffs on 8 European countries if a deal isn't reached by February 1st. We don't have details on what this proportional response would be, but she does go on to say that she is working on Greenland investment surge among European countries as well. So once again, we have a response from Ursula von der Leyen speaking at the World Economic Forum in Davos. The Greenland response from Europe will be unflinching, united and proportional. Treasury Secretary Scott Bessent then in Davos signaling the race for Fed chair may be coming to an end very soon.
We have 4 fantastic candidates. It will be up to the president, and I would imagine that he will have an announcement maybe as early as next week.
Joining us from Washington is Bloomberg's Kasia Kimishinska. So, Kasia, the Treasury Secretary making some headlines this morning, many headlines, in fact. Give us some of the highlights.
U.S. Treasury Secretary Scott Bessent is doing what President Trump wants him to do, which is to try to calm down the markets. As you mentioned, there is a sell-off. It's hurting both U.S. stocks like the Magnificent Seven and U.S. Treasuries. And so Treasury Secretary Scott Bessent is trying to address exactly that, especially the sell-off in U.S. debt. So he said in Davos today that he hopes that the global leaders will de-escalate, that they will find a solution out of many conflicts, and also that investors should not overreact. So he compared the situation in the markets today to what happened in April of last year when President Trump announced global tariffs. Still, I think we have to see what Bessent tells Trump privately and whether he will manage to talk his own boss, President Trump, down, because so far the tone that is coming out of President Trump is very combative. We had a lot of areas of tension, not only Greenland, but also this peace port in Gaza, additional tariffs on 8 European countries, and then even more levies on just France. So I think investors are right to be concerned, and they have to wait to see what Trump says when he arrives in Davos, most likely tomorrow.
Yeah, I mean, that was not a very short market response back last April. I mean, that Liberation Day, turmoil in markets lasted several days, and it really just calmed down, after a lot of back and forth between the president and the Treasury Secretary as well, Kasia. This 200% champagne tariff, particularly against France, what does it tell us about the relationship with Macron and how that's developing? Because we know there have been texts since the president announced that he might do that.
Yeah, it's clear that Trump sees Macron as weak and as a good target to attack. We'll see whether the two continue to talk and what other leaders in Europe will manage to achieve during the Davos meetings. I think one thing that is clear is that there will be very little progress on Ukraine. Trump isn't interested in this issue at the moment at all. He is much more focused on Greenland and also on his domestic targets, such as affordability. It's most likely that tomorrow at Davos he will want to talk about affordable housing, perhaps lower rates on credit cards. Maybe he will mention the race for the new Fed chair. Very likely he will attack the current head of the Federal Reserve for keeping interest rates too high.
Well, and Kasia, we just got a response from Ursula von der Leyen, the European Commission president, to the threats that the president has been making. And she's basically saying, look, a deal is a deal when it comes to the deal that was made with Europe, and that there will be a response on Greenland, and it will be united, it will be unflinching, and it will be proportional. So, that's not going to please President Trump arriving in Davos, and he has to meet various parties, right, over Greenland. What will those rooms be like? What will he say to them, and what will the response be?
Yeah, so I think she is trying to keep all the door open here. So she's showing that Europe is ready to respond, but also eager to negotiate, right? I think this carrot that she has there is keeping the EU-US trade deal on, even as there is some opposition to that deal currently in Europe. But she's also saying, okay, if you impose those 10% tariffs on February 1st, we will retaliate. And of course, there are ways that Europe can hurt, especially some of the swing states here in the U.S., where voters will decide in November whether they want to re-elect Republicans or vote for Democrats. So I think Europe has some, carrots and sticks there, really, and we'll see how the talks tomorrow and perhaps beyond tomorrow go. President Trump often sets deadlines only to move them later on.
Kasia, thank you so much. That is Bloomberg's Kasia Klimashinska in Washington. Now to other top stories trending on the terminal this morning. President Donald Trump flipping his position on the UK's plan to return sovereignty of the island Diego Garcia to Mauritius. He had previously supported the proposal. Trump cited the decision to justify his ambitions for the US to acquire Greenland, saying the UK giving away the island is an act of, quote, great stupidity. Elon Musk's online brawl with Ryanair's CEO dragging into a second week. The world's richest man has again floated the idea of buying the airline after clashing with Michael O'Leary. Musk posted a poll on X on Monday asking if he should purchase Ryanair and, quote, restore Ryan as their rightful ruler. O'Leary called Musk an idiot. And South Korea will hold off from disbursing the first $20 billion of its planned investments in the United States under the trade deal framework it agreed with Washington. Sources said that this would be until Seoul is confident that this will not have an adverse impact on the won. Coming up, an interview with Banque de France Governor François Villeroy. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1-in-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This has been Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Keep an eye on these markets today. There is turmoil in these markets. We have futures pointed very much lower, back down now, pointed 2% lower. on the Nasdaq 100. It's the global bond market that is perhaps suffering the most, with Japanese 30-year yields up 27 basis points in the session, a massive sell-off which infected bond markets around the world that were already on edge, with President Trump threatening more tariffs on Europe, and a response now from Europe's Ursula von der Leyen saying that the Europe response will be proportional. So that's really causing some ruckus here in the bond market. Look at the 30-year yield at 4.93, practically at levels we haven't seen since last summer. The 2-10 spread is at 70 basis points. We have the VIX well above 20. Let's take a look at the yen, because that started the session very much weaker on the news that Sanae Takeichi was going to pause the 8% sales tax on food items for 2 years. Now, that would add $5 trillion to Japan's sovereign debt burden, and that really panicked investors. You saw the yen weaken significantly and then strengthen all of a sudden. Investors repatriating, perhaps, or the idea that they might be repatriating, also the safe haven flows, no doubt, playing into that strengthening as well. It was an almost one full big figure move. Let's head back to Davos, Switzerland now, though, where Bloomberg's Francine Lacroix is standing by. Francine.
Thank you so much, Vani. I'm delighted to be here in Davos to talk about everything that's going on. Of course, we have a big U.S. administration. I'm delighted to be joined by the Banque de France governor, Mr. François Villeroy de Gallo. Thank you so much for joining us, Governor. Look, there's a lot going on. You go in the Congress Center, you go along Promenade, and people are anxious. It's CEOs that are anxious. It's leaders that are anxious because of what's happening with the Trump administration in Greenland. How much do you worry about these extra tariffs on champagne? 200%, possibly.
So champagne, by the way, is an excellent French product, if I can use this opportunity. But more seriously, in this crisis, we should remain calm, and each of us should carry out his duty. So it means that it's up to political leaders to manage and hopefully solve political tensions, which are at the core of this Greenland crisis. And it's up to us central bankers to assess the economic consequences and possibly the monetary policy consequences of tariffs. We can discuss there.
But honestly,
I think we were not that bad in Europe in the last year, if you look at our collective reaction.
Governor, I have to say, I mean, most economists had said, look, we'd gone through the worst when it comes to tariffs and threat. If you have 200% on champagne or something else, but this is what we're looking at right now, could it change the trajectory for European monetary policy?
No, let us take perhaps a broader view on tariffs. So far, and there was Goldman Sachs analysis, for example, tariffs were paid by the U.S. economy, be it U.S. businesses and then U.S. consumers. Yeah. And Goldman Sachs figures are quite impressive. It's around 90%. And there was even a study published yesterday by the famous Institute of Kiel in Germany, Professor Hinz, which says 96%. So what we have to assess is the effects on activity and on inflation. On activity, tariffs are obviously bad news for everybody. But it's a bit through the direct effect. It's still more for trade uncertainty. And the problem is that, again, this crisis raises, again, trade uncertainty. Yeah. So it's bad news for everybody, again, including the U.S. On inflation, which is our core mandate, so far, and I said it 1 year ago, tariffs didn't have an effect on our inflation trajectory. As you are aware, we were very successful diminishing the inflation for, if we take Davos 1 year ago, we were 2.4, we are now at 1.9, so very close to target. We diminished interest rate from 3% to 2%. Yeah. So we should assess all the possible effects if there are additional tariffs. We don't know yet. Again, it's a political crisis, but there could be a limited direct inflationary effect. But there could be also an appreciation of the euro, which plays in the opposite direction, some downside effects on activity. So if I take the whole picture, I would say that probably the inflation on European inflation, I stress European inflation, I expect it to be muted.
What should the European response be?
On monetary policy, which is, again, our core business, we are in a good place, as Christine Lagarde stressed, but I stress once more that we should be agile and pragmatic, so look at data. On more general trade policies, this is not within my remit, But obviously, we must find a political solution to this crisis.
Governor, you said it was fanciful to expect a rate hike this year. Is it still the case?
Bearing a major external shock, I said, but I think it's still the case. Yeah. There are downside risks on inflation, which remain at least as significant as the upside risks. There are upside risks also, but to mention some downside risks, I mentioned a possible appreciation of the euro, linked also to some attacks on the Fed independence, which are weakening the dollar. If you look also 1 year ago, the euro has strengthened, which people probably did not expect in Davos in January 25. It's a sign of confidence in the euro. There are also the question of Chinese import, wage moderation. So there are many factors which could really dampen inflation, but we will see. We are, as you know, data-driven and meeting by meeting. These are not only words.
At this point, do you think it's fanciful to expect a rate cut this year?
I didn't say that.
That's why I'm asking.
And I don't say it again. We'll see. No, I'm not announcing it, but again, we are pragmatic. If I had to sum up, I would say that with 1 year hindsight, Europe has managed the situation rather well cyclically. Growth has been resilient in the euro area, 1.4%, more than expected. Interest rates cut, the euro appreciated. What we have to do now, is still more in this crisis, is to leverage on our economic assets, and we have significant ones, to increase our growth more structurally. This is about the Draghi report, and there were progress made, but not enough. Look at the 28th regime, look at the Saving and Investment Union, look at the Omnibus directives. But we need to act quicker, stronger, and probably clearer. À la Delors, if I may. Yeah. It was a calendar, a mobilizing date, a comprehensive package. I hope it will come in the next month.
Do you think it will come? Because again, I know this is now for the time for Europe to act, but we've been saying it for quite some time. At the same time, if you look at geopolitics, there's just more shocks. So I don't know whether it's a distraction or focusing the minds.
Again, Europe has acted, not quickly enough, not strongly enough, but I mentioned some progress. And it's good on the cyclical side, not fast enough on the structural one. But again, if this difficult situation has one virtue, is to push Europe to accelerate what I call the three I's: integrate the single market, invest better. This is the Saving and Investment Union, and innovate faster. This is simplification and omnibus. Okay. And I guess there is a growing political consensus about that. I can say there is a complete consensus around the table of the Governing Council.
Governor, going back to inflation, I mean, you're expecting actually inflation to run close to but below 2% for this year and I think next year. I mean, is it a danger that you're kind of slightly below, or is it not a problem?
You must look also for the forecast horizon, and in our forecast, we are back at 2%. So we will judge, again, meeting by meeting, if we are really around the 2% now for 8 months in a row since May. So this is a very good position, again. If there were to be a more significant and a more lasting deviation, then we would adapt, but we are not there at present. Let us be pragmatic in this very polarized, and political world. You know, this is also the role of central banks to keep calm and focused on their duty.
Do you think we're importing...
if I may,
yes,
then we guarantee price stability and as much as possible financial stability, which is a significant contribution in this crisis. Financial stability, we should be really very focused because there are some risks.
Governor, I mean, central banks have always been there, right, to be pragmatic and to help. You mentioned central bank independence in the U.S. I mean, how much of this is a worry? The market hasn't really latched onto it. But this is a major anchor.
Most central bankers worldwide, including myself, express their support to Chair Powell. I won't repeat the statement, but it's loud and clear. There was also significant support in the U.S. So like many things, it's now mainly a U.S. debate.
Are we importing deflation from China? Do you see that as a possibility going forward?
Increasing imports from China with significant figures. If you take the last 6 months, we know there was an increase in volume of 11% of Chinese imports with lower prices. So it's a factor which contributes to lower inflation. This is why I mentioned it among as a downside risk on inflation.
And
yes.
You also mentioned the de-anchoring, right, of inflation coming from the U.S.
Yes,
possibility.
but we are not. There are various factors. If you look at the U.S., there could be some de-anchoring, which runs to an increase of long-term rates, and this would be a very adverse situation linked to the attacks on the Fed. So I strongly hope the Fed independence will be preserved. In Euro area, I see no de-anchoring of inflation expectations. Again, this belongs to the good place.
Again, you've warned that France is in a danger zone when it comes to the deficit. If it can't get its deficit within 5% of economic input, what will be done? I'm not going to ask you what can be done.
Here we have some good news since yesterday, because the Prime Minister announced a deficit at 5%, which is a significant reduction step. It's not. It will have to be followed by other steps in the following years, and we will probably have a budget. So these are the good news of yesterday. Now let us see precisely at the content and what will happen in the parliamentary debate. But I would say that in this cloudy sky here, there is a bit more light about French fiscal policy.
But are you worried about hedge funds? Are you worried about what could be the triggers for a possible sell-off in France?
But again, now there is a commitment by government and parliament to bring a deficit back to 5%, which is a positive sign towards financial stability. Now, the Banque de France published this morning its financial stability report, and we mentioned 4 risks very quickly: public debt, and not only in France, valuation of AR, cryptos, and non-banks and private credit. So on all this front, we should look everywhere with great caution. But again, on fiscal policy, there are rather good news from France in the last hours.
Monsieur Duguay, what do you worry actually when it comes in general to financial stability across the world?
I worry about this 4 risks I just mentioned, and so we should keep very cautious on that. There is room for simplification on some banking rules in Europe, and we advocated that with the ECB and SSM, but we shouldn't go to deregulation. This would be a more dangerous situation.
Governor, thank you so much for joining us. François Villeroy de Gallo there, the governor of the Banque de France. With that, Vanya, I'm going to send it back to you in New York, and we'll have plenty more throughout the day here in Davos.
Excellent, Francine. Can't wait to hear some of those other interviews, and a fantastic interview there as well. Thank you for that. That's Francine Lacroix in Davos. I want to bring you some headlines from China's Vice Premier, who's also now speaking in Davos, He Lifeng, saying he wants support for free trade and economic globalization around the world, saying the world needs to return to the rules-based trade order. He Lifeng also saying China sees itself as a trade partner for everyone, not a rival. And he's also telling those in attendance that China never pursued a trade surplus, and China wants to grow its imports but wants other countries to benefit. Once again, China's Vice Premier He Lifeng urging a return to the rules-based trading system and urging free trade and economic globalization, saying China can be a trade partner for everybody, not a rival. Now we're going to take a look at what's ahead this week. Netflix reporting its 4th quarter earnings after the market closed today. President Trump, of course, will address the World Economic Forum at Davos on Wednesday. All eyes will be on that address. And then the BOJ announcing its rate decision on Friday. A lot could happen between now and then, with a 27 basis point move in the 30-year Japanese yield today alone. Let's take a look at the macro environment as we head into the first trading day after a long weekend in the United States, and a big reaction after a huge sell-off in Japan. We see futures pointed lower to the tune of 2% on the Nasdaq 100, 1.6% on the S&P. The bond universe is suffering today as well. We have yields right up to 493 on the 30-year. That 2-10 spread back at 70 basis points. We're at levels we haven't seen since last September. We have a flight to safe havens. Gold above $4,700 an ounce. Some real jitters in this market, in spite of Scott Bessent urging calm. That's it for Bloomberg Brief. Surveillance continues the conversation.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This year, we think it's a story about broadening.
We're in a period where investors can have more confidence.
The key issue here is really on the risky asset side.
There's just more vulnerability on the volatility side. We want to stick with earnings, which we think are going to be the driver of equity markets over the course of this year.
Bloomberg Surveillance, live from Davos, with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from Davos, Switzerland, for our audience worldwide. Good morning, good morning. The World Economic Forum taking on a new dimension. Davos interrupted Wednesday morning here in Davos, Switzerland. The President of the United States addressing this forum, addressing the world, addressing the nation. Affordability in focus, but I have to say, the smell of tariffs hanging in the Swiss air for the last few days.
Yeah, this really has been dominating the entire conversation. A question around the NATO alliance, a question around exactly what the U.S.'s role will be, and a question around how much the geopolitical fault lines are changing at the same time that business is booming.
Typically, they spend months, maybe 12 months, planning the agenda for an event like this. The president's got his own ideas about what the agenda should be, and everyone's getting in line.
Absolutely. He's really coming here as a disruptor. And you talk about this speech he's going to be giving. It's really twofold if we think about it. He needs to address the everyday consumer in America ahead of the midterm elections. That is President Trump's North Star this year. Talking about affordability, maybe lambasting what he would call the global elite by veering off that path and not thinking about the everyday man. At the same time, for many people, they find that this Greenland issue has just been an absolute distraction to the Davos agenda.
Our North Star here at Bloomberg Surveillance, one thing, financial markets. Check it out so far this morning. Equity futures down and down hard. Bonds selling off, Treasury yields up, the dollar weaker. That is not a great mix. A reminder maybe of what happened last April. But it's not just the US bond market. Bramo, we need to talk about what's developing in Japan. Check out the long end of the curve on Japanese yields. 10s, 30s, 40s. We're talking about 20 basis point moves out of Tokyo.
The 30-year yields over in Japan have seen an increase of 38 basis points over the previous 2 sessions on a proposal to potentially A, hold snap elections, and B, also increase some of the assistance to the nation. A real question here about how much what we're seeing in the U.S. bond market is being driven by Japanese bond markets introducing more volatility, and how much this has to do, exactly to your point, about the Sell America trade going back to Liberation Day.
There's certainly a Sell America flavor to the price action this morning, and we'll get into it. We talked about this, Anne-Marie, non-stop last April, and we're seeing it again. Yields are up, but the dollar's weaker. You mentioned gold a little bit earlier when we were planning the program together. Gold's rallying, silver as well. These are the kind of things that don't speak well to the policy coming out of the White House.
Well, I was on Air Force One right before the president reversed track, and I asked him about the Trump put, and there was a question he didn't like. And he always talks about how he sends out his Treasury Secretary, Scott Bessent, to soothe the market. Well, guess who is standing in Davos this morning, soothing the market, comparing the consternation we saw on April 2nd on Liberation Day to what is happening right now. And the Treasury Secretary says this is the same kind of hysteria. And he's urging everyone here to sit back, take a deep breath, and let things play out.
We're taking a deep breath. Hopefully, at some point in the next week, might find out who the next Fed chair is.
Okay, that's, yes, that could
It
happen
was
next
2
week.
weeks. Now it's a week.
Okay.
Like we're shortening time horizons
exactly.
here.
And this is what people are banking on here for the optimism, because rate cuts will save everything.
Coming up this week, fantastic lineup for you. We'll catch up with the Morgan Stanley Chairman and CEO, Ted Pick, the Bank of America Chairman and CEO, Brian Moynihan, the US Commerce Secretary, Howard Lutnick, and a whole lot more. Plenty of questions for the Commerce Secretary, I imagine, coming from the European side as he touches down in Switzerland.
Yeah, 200% tariffs on champagne. Is this a reality? Exactly how far are you willing to go at a time when relations are increasingly fraught?
We begin this hour, though, with stocks falling worldwide. The standoff between the US and Europe presses on. Joining us to kick off our coverage here at the World Economic Forum, Viz Raghavan, the head of banking at Citi. Viz, good morning. Good to see you.
Good morning.
I want to start by thinking about where we were 12 months ago, like peak optimism around America. Everything's going to be fantastic. In markets, it was. Is that all we're looking at? Has something changed in the last 12 months?
Look, it was inauguration week, right? Last time we were here, and you could just, it was palpable how leaning into America, pretty much, investor sentiment. Everywhere you looked, it was, all roads lead to America. I think that U.S. sentiment is unabated. I mean, if you even look at markets today, all roads continue to lead to America. Capital formations are happening there. Liquidity is all, flocking there. You've seen the markets. And I think the only wild card is macro, geopolitics, and everything that you guys said.
We've got to ask, though, Viz, does it really matter? I was looking at a PwC survey that was released yesterday, where they literally survey hundreds and hundreds of CEOs, and they asked them to pick the region they're most excited about. 35% America. Without doubt, the leader. That was up from last year from 30%.
Yeah.
Doesn't that speak to the kind of economic activity you and the guys are seeing on the ground at Citi, the pipeline that's building into 26?
I mean, the pipeline going into this year is one of the strongest I've seen. And this is across the board. So there's not, typically you have years where tech is doing really well, and then some years healthcare, and you see the contrarian, defensive sectors come in. Across the board, every sector, you're seeing a real desire to do deals. And then you have this AI overlay where every company is looking at, what are the what's my AI nexus? How am I going to get more efficient? So it's a incredibly potent deal environment, and it's all the drivers. There's so much liquidity also, which is driving this kind of deal frenzy. I think at least from a market point of view, that looks like it's going to be staying up for a while.
We'll get into the pipeline, but you keep talking about how the only thing that could disrupt it is geopolitics. And then a lot of this deal activity is stemming from easy market conditions that have completely ignored geopolitics. What would you see that would start to make you think, hold on a second, maybe it matters a little bit more than chief executives are talking here?
But let's go back again to this Davos last year. We said tariffs was the headwind. And we were really worried about it. We were spooked. And then net, the market found out. I mean, April, remember, there was just total hiatus. Everything stalled. And then there was this savage rebound. What tariffs showed us was there's a path. All's well that ends well. There's a path. There's this shock and awe. And then you land somewhere which is reasonable. And then you shrug and you kind of move on. The tariff thing has been pretty much assimilated, until the recent kind of, new tariff saga. The tariff stuff had kind of, folks had digested, 10% was a base case, up to 20% I can assimilate and digest. If it's 25, 30, then do I kind of rejig my supply chains? Do I make in America? Do I nearshore, offshore, friendshore? So that played out. Then you saw, the whole kind of, Venezuela market shrugged off. Then you saw the whole card thing, market shrugged off. So fundamentally, what markets are saying is this will also land. The final outcome may be, different from, the first shock and all. And hopefully sanity prevails, and then you'll find some, a compromise, and, folks will have to adjust, and then this will land well. So, you may talk about, is this complacency? Are we sleepwalking into something? Who knows? But history shows us that, yes, we will get there.
Your team saw an 84% increase in advisory fees in the fourth quarter, year over year. It has been an incredible blockbuster amount of issuance, and you see a similar year shaping up. How much is predicated on rate cuts coming from the Federal Reserve?
I think it's not entirely predicated on rate cuts. I think rate cuts helps, but it's really driven by there is an underpinning of equity valuations. If you look at where equity valuations are, and multiples have gone up, but earnings have kept pace. So net, earnings have kept pace with the valuations that you're seeing. But this puts a lot of pressure on boards, on management teams to show growth. And if that growth is not forthcoming, then you get punished. Whether it's activists, whether it's your shareholders, etc., they vote with their feet. So that growth has either got to come organically, or if it's not going to come organically, I've got to go buy. So which fundamentally then you have this melting pot, like $2.5, $3 trillion of private equity firepower, which they incentivize to deploy that capital. So effectively, you have so much buying interest that valuations and share prices are underpinned, because if you like something at 100, you like it even better at 80 and even better at 70. So net, there's a better buyer for those assets. So that M&A theme. And, last year was a great year for the street. Citi had a fantastic year. That M&A theme is going to continue, bar some geopolitical kind of, because this is entirely about confidence. Valuations can go up and down. You will adjust. But if that confidence goes, then effectively their shutters come down and things will stall and come to a halt.
How confident are you in potentially seeing a Trump credit card that banks might roll out that's capped at 10%?
I mean, look, I think when you look at the point in question here is affordability, and we all agree that that is got to be dealt with, and we are all in consensus on that. I think the key on capping rates, etc. The question is, what you don't want to do is squeeze out or drain credit from exactly that section of the population that needs it most. So once again, this will land somewhere, and there'll be an element of adjustment and compromise, and we'll be fine.
I have to bring it up because today is January 20th, and it's the self-imposed deadline by the President of the United States that he told banks needed to adhere to this. Is Citi in touch with the White House, with Congress?
Absolutely, we are in constant communication with various policymakers and the like, and the industry too, because it's not just Citi; it is the old street that is And once again, I think affordability thing is something that has to be dealt with, and we will land somewhere.
And it's something that's going to come up, no doubt, in the address from the president in the next 24 hours. Just let the record show, you brought up the credit card issue, we didn't. You went there first, okay?
I had every right to follow
that was before, that was in the warm-up session.
You went there. I think the bulk of this conversation so far, and I'm sure you feel it, reflects on the environment and the backdrop and not execution. And that's unfair to Citi, and I want to get into that. Jane sent out a note that was widely circulated in the last few days, and it was about the vestiges of old habits falling away. Can you breathe a little bit of life for the people who aren't working at Citi, just into the story of how execution has changed at the bank, how you're building the wallet size when you get a deal? What's happening?
Yeah, look, I think this is a high-performance mindset. You've seen incredible work done by Jane and the leadership team on transformation, on remediation, and really setting this company up, for the future. What you saw through last year, and also I think the quarters before, it was a demonstration. It was a taste of the earnings power of the company. So whether you take banking, I mean, we were up 35% in revenue, and you saw 85% in M&A. Markets had a superb year. You saw the same in wealth. You saw the same in TTS, in services. It's globally one of the premier platforms. So what you're seeing is a real focus on making sure that this is our time, this is our moment. We want to be leaning in and absolutely kind of driving.
What does that mean in practice, though? Because you talked a lot about the results. I'm really interested in the approach. You're banging down the doors of potential clients, more face-to-face meetings. What are you actually doing in practice?
I think it is
that's
really
changed?
one Citi, So it's really being joined up across banking, across markets, across services. So clients see a uniform, coordinated, one city approach where through a single point of entry, they're absolutely savoring the best of what Citi has to offer, which means businesses over-communicating, businesses joined up, taking calls for the whole, not just what is in one's own kind of myopic interest. Second is really around making sure that we are both getting our fair share and making sure that we are earning, i.e. through content, through ideas, through intensity, making sure we are earning our fair share. And the two are kind of linked because, we have incredible relationships globally, probably the premier global, truly global footprint. We have lending relationships, we have services relationships. The question is, what are we missing? What business are we not doing? And making sure that we're all organized to go after that. And a lot of that you have to earn. So it's not just about demanding it, it's about, absolutely making sure that we are earning every piece of business.
Jane's also talked a lot about cutting staff, and there have been some pretty big job cuts at Citigroup. How much are you replacing some of those roles or fortifying some of the front office workers using different artificial intelligence programs?
So two parts to that. One, the cuts, et cetera, is something that, we'd flagged a long time back. So that's just systematically executing against what we said we would do, and I think that's panning out. AI is becoming absolutely entrenched in pretty much, what we are doing and what we want to do. The easy wins have been around, whether it's processes, whether it's been around maker checker, fraud prevention, controls, AML, and all of that has been, easier to get, ramped up. The work in progress, and this is really kind of and this is true probably for the whole street, is around the front office, creative, innovative idea generation, out of the box. And this is true, of banking, what can, if you're the CEO or the CFO of a company or the board, what can I tell you that you don't already know? What is innovative? What is creative? And remember too that if I can run AI, the company can also run the same AI algorithms, and so it's a constant race to be more creative, more innovative, ahead of the pack. And I think that is where a lot of dollars are going in. And there you also have to be smart. In some cases, you want to be early followers, not early adopters, because this is expensive. So I think the key is to be smart, nimble, and very curated in how you approach it.
Any thoughts on Greenland, or have you got to go? You should just say we've got to go.
We have to go. I think it's good to see you.
Thank you, sir. Congratulations on the last quarter. Looking forward to catching up later
Thanks for hosting me.
Thank you. We appreciate it. Viz Raghavan there of Citi. Let's get you an update on stories worldwide. The news flow, absolutely unbelievable over the last 24 hours. With that, with your Bloomberg brief, here's Vonnie Quinn. Hey, Vonnie.
Good morning, John. Thank you. President Donald Trump saying he will meet with several parties in Davos over his plans to take control of Greenland. The president said he had a, quote, very good telephone call with NATO Secretary General Mark Rutte and told him, quote, Greenland is imperative for national and world security. Treasury Secretary Scott Bessent said President Trump could announce his Fed chair pick as soon as next week. Speaking in Davos, the Treasury Secretary said BlackRock's Rick Rieder, National Economic Council Director Kevin Hassett, Fed Governor Chris Waller, and former Governor Kevin Warsh are the final contenders to replace Jay Powell as Fed chair. A personalized cancer treatment developed by Moderna and Merck helps prevent the recurrence of high-risk skin cancer after 5 years. The company is saying patients with severe melanoma who got the injection, along with Merck's cancer drug Keytruda, were 49% less likely to die or have their cancer return as those who received only Keytruda. And that is your Bloomberg Brief. John.
Hey, Vonnie. Appreciate it. More from Vonnie in about 30 minutes' time. Up next on the program, reigniting trade tensions.
I don't think they're going to push back too much. Look, we have to have it. They have to have this done, so we'll see what happens. But let's put it this way. It's going to be a very interesting Davos.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Live from Davos, Switzerland this morning. Good morning. What a start to the price action following a long weekend stateside. Here in Switzerland, waking up to this. Equity futures down and down hard. Bonds selling off, Treasury yields higher by 6 basis points or so. But it's the accompanying dollar weakness that reminds you of early April and Liberation Day and the risk aversion we saw around that period. Are we seeing a repeat as the president threatens many nations attending this get-together in Davos this week with more tariffs?
You know, there's a speculation that some of the volatility is coming from Japan, but I think you are absolutely right to point out the dollar trade. If you also see the disruption in U.S. bonds versus, say, German bonds, it is a more significant sell-off in that typical haven trade. So the flavor, the whiff of Liberation Day type of sell America trading, unclear how far it will go as United States traders wake up.
There was a sense to some extent last year that the price action constrained the president, that if there were guardrails over what happened with policy, it was in the bond market. And maybe we got a hint of that from the Treasury Secretary a few times through last year. Is this the start of something bigger just to push back in financial markets?
Well, the Treasury Secretary says this is the same hysteria as April 2nd, and everyone needs to take a deep breath, calm down. There will be potentially maybe an off-ramp. Remember, it was the bond market that got, quote, yippee at the president talked about. Then we saw him reverse course, because the question always was, is this the new rules of the road or these negotiations? And I think at the moment he's coming to Davos, Switzerland with shock and awe, but potentially setting up new negotiations.
Many people will be sitting there thinking this morning, looking at the Bloomberg terminal, you know what, I've seen this movie before. I'm conditioned, I know what happens next. You buy the sell-off, we rip into year end. Are we going to see a repeat of last year? What's phenomenal is, yes, a lot has changed with policy, but markets have been totally okay. And just to reflect on the conversation we had with Citi just moments ago, listen to them talk about the pipeline and the optimism for the American economy, and then compare that to the front pages of the European newspapers about a breakdown of the transatlantic relationship. Does something have to give here?
Well, it feels like there is a dichotomy right now between the optimism that we're feeling and hearing from CEOs and the C-suite more broadly. Consumers are spending, markets are freely operating, there is a sense of growth around the world versus these sort of catastrophic new world order types of questions. The issue is, and Ms. Raghavan actually really highlighted this well, in the past, volatility tied to geopolitics never lasted. So people are ignoring it more so at the same time that people quietly are saying they're diversifying away from the United States. You're hearing that more. So that's actually something to pay attention to.
Day one of coverage for the Bloomberg Surveillance team here at the World Economic Forum in Davos, Switzerland. Under surveillance this morning, reigniting trade tensions.
I don't think they're going to push back too much. Look, we have to have it. They have to have this done. They can't protect it. NATO's been warning Denmark for about 20 years now, longer than that, 25 years. They've been warning Denmark about the Russian threat. And it's not only Russia, it's also China. So we'll see what happens, but let's put it this way, it's going to be a very interesting Davos.
That was the President of the United States ahead of his appearance in the next 24 hours. Joining us from Washington, Tyler Kendall. Tyler, the President setting this agenda on fire. His approach to tomorrow, what do we know?
Yeah, John, good morning. I mean, President Trump is really just ramping up the pressure as he heads to Davos. That speech tomorrow, now slated for 8:30 a.m. Eastern. And though he is abroad, of course, we know that he's going to be focusing in on some domestic issues, including that his NEC director, Kevin Hassett, has already previewed that he's going to roll out a plan related to letting Americans use and pull from their 401k for a down payment on homes. But even so, it is hard to ignore that he has only been ratcheting up the disputes as he heads in to the World Economic Forum. And even in just the last few hours, as European leaders are reacting to his latest threat of a 10% tariff by February 1st against those countries that have rallied around support for Greenland. And it appears now that issues are dovetailing after French President Macron raised concerns not just about Greenland, but also the White House's proposed Board of Peace in Gaza, which a person familiar tells us this president is looking to finalize this Thursday, where you are in Davos. But in response to the French president's concerns, President Trump is now floating a 200% tariff against French wine and champagne. While it remains to be seen if that is actually going to come to fruition, it is just the latest dispute after a weekend of escalation, as Bloomberg News now reports that the EU is considering pulling out of its trade deal with the U.S. and weighing its own retaliatory tariffs. Now, John, I think it's worth mentioning here that all of this comes after a week of meetings here in Washington, where administration officials met with officials from Greenland and Denmark, and that was considered to have gone relatively well. They actually set up working groups to keep the diplomatic channels open, but it is clear that President Trump didn't feel that way. John, of course, we're going to be watching those remarks, but also who he does and doesn't meet when he visits there in Davos this week.
Tyler Kendall with the latest in Washington. Tyler, thank you. If you want to upset the elites in Davos, Switzerland, tariffs on champagne, one way to do it maybe?
That's definitely one way to do it, especially if you want to come into really with a bang. Also, the tariffs Trump is talking about, they might get overturned this morning at 10 a.m. when Supreme Court has a decision day, an opinion day, and we might get that decision. So basically, he's talking about tariffs that we don't even know if he's able to use legally.
We've got a packed agenda here in Davos, Switzerland, happening right now over at Bloomberg House. Bloomberg editor-in-chief John Micklethwaite sitting down with the Anthropic CEO, Dario Modi. Let's take a listen.
Or superhumanly good at recommending shopping or ads or various things like that. Anthropic has focused, I think, first and foremost on enterprises, developers, and to the extent we do consumer, we're very focused on productivity and the kind of high value end of the consumer work. And so that gives very different incentives, right? If you want to get things done, we talked about AGI and superintelligence before. One of the things I would say is that, there are superintelligences today, and they're basically large corporations, right? They're smarter than any human can be at, solving the problem of, shipping commerce at the lowest possible cost, or making solar panels at the lowest possible cost, or launching rockets at the lowest possible cost. And so there's really high returns to intelligence in this area, which I think incentivizes us to kind of build the right thing. It's also, I think it's a business that is more stable than consumer. We don't need ads. We don't need, large numbers of free users. We can just very directly create value, right? There aren't all these weird externalities of like you're prioritizing engagement, you're prioritizing these other things, you're generating all this slop. We just make stuff that people can use.
A year ago here, you said the Chinese were catching up a bit. Do you think now the Chinese have fallen behind?
I think they never really caught up that much. So, of course, there was this huge excitement around DeepSeek, right? But, the truth was a couple things. One, those models are very optimized for the benchmarks. It's actually very easy to optimize a model for a finite list of benchmarks. When we go out into the world, right? When we're competing against other companies for enterprise contracts, we see, just honestly and candidly, we see Google and we see OpenAI. Every once in a while, we see a couple other U.S. players. I have almost never lost a deal, lost a contract to a Chinese model.
But now you have the Trump administration, and I think you've already protested about this, giving high-speed chips, NVIDIA chips to the Chinese?
That's right, that's right. The thing that is holding them back, and they've said it themselves, the CEOs of these companies say it's the embargo on chips that's holding us back. They explicitly say this. And now, indeed, there are some policies, and I hope they change their mind, to explicitly send not quite our latest generation of chips, although it was reported that even that was being considered, but the generation of chips that's just one back, that's still extremely powerful. And we are many years ahead of China in terms of our ability to make chips. So I think it would be a big mistake to ship these chips. The analogy I thought of, if you think about the incredible national security implications of building models that are essentially cognition, that are essentially intelligence, right? I've called where we're going with this a country of geniuses in a data center, right? So imagine 100 million people smarter than any Nobel Prize winner, and it's going to be under the control of one country or another. So I think this is crazy. I think it's a bit like I don't know, like selling nuclear weapons to North Korea and bragging, oh yeah, Boeing made the case.
So your friend David Sachs is basically arming the Chinese.
I wouldn't refer to any particular people, but I would just say that this particular policy I think is
akin to
is not well advised.
Another issue in this, you could be right. All this technology would be going in the right direction, but economically, we could be heading towards a bubble. Do you think that's true?
Yeah. So I would separate out the two things. One is the basic exponential. And that's what we've been talking about. That's been kind of the technological direction. And there, just like with Moore's Law, you can never be sure that the technology is sort of fully going to advance, that it's going to keep going, right? It's a fundamentally inductive problem. But now that I've seen well over a decade of it, I would say I am pretty confident that it's going to continue, or at least I'm more confident than I've ever been at any time in the past, that it's going to continue to where the models are basically smarter than humans at almost everything. And I think there's a good chance that even happens in the next year or two. Again, seems far away, but this property of exponentials that they catch you by surprise. And if it's not a year or two, I think it's pretty likely that it's at least less than 5 years, within the 2020s. I think this moment will come in the 2020s. So kind of, I'll get into the economic.
That's the AGI.
Yeah, I'll get into the economic diffusion, which I think is complicated, but I don't want anyone to forget that that as long as we have that fundamental technological gain, there's going to be many trillions of revenue, maybe many trillions per company in this area, because the economic potential is so great. Now, there's a separate thing, which is that we don't know how fast enterprises, companies, are actually going to be able to use this technology, right? The uses of this, what the technology is capable of today, is probably 10 times what the enterprise of the world are able to deploy. And I see it with our customers every day, where I'll talk to a CEO and they'll understand, and their executive team will understand the power of this technology, for automating customer service, for coding, for many other things. But they have a company of tens of thousands of people who are perfectly brilliant people, but experts in something that is not AI, and have to learn to use AI. And that, different names for it, change management, enterprise transformation, whatever it's called. The need to do this is very slow. It can take years. And so we have this powerful technology that I have an incredible amount of confidence will generate trillions in revenue, but we don't know exactly when. Plus or minus a few years, we don't know exactly when. And in the meantime, companies have to buy compute to serve all that revenue. And you don't want to buy too much because you could financially overextend yourself, and you don't want to buy too little because then you can't serve all the revenue. And so that's where the kind of economic and financial risk comes from.
So, but you are involved in that, building data centers. You're spending vast fortunes there. You've got the deals with NVIDIA. Do you worry that that's going to come back and bite you?
So we have some advantages in this. There's a stability to enterprise business that there is not to consumer, right? Consumer is very fickle. Enterprise purchasing, enterprise predictions are predictable. Also, enterprise tends to have better margins. The margin is basically how much buffer you have between buying too little and buying too much, between what you have to pay for and what you have to support in revenue. So we have a number of advantages here, but I won't deny that there is some inherent risk in all of the companies to this process. Whenever you have an upside whose amount is uncertain, or even whose timing is uncertain, and you have to make financial decisions somewhat blind to those things. You have to decide early to build out capital, to build out resources a few years in advance. There's going to be some inherent risk that's driven by that uncertainty. And I do think that some companies have probably overbought. I'm not able to look at their financials. I just know what they announce, and I'm like, whoa, I wouldn't necessarily have done that. I'm pretty happy with the decisions that we've made, but and I can't be sure about others. But it is entirely consistent that this could be the most transformative technology in the history of the world. That some companies will do really well, but not every company may.
Very quickly on that, as you said, you're on the enterprise side. On the consumer side, OpenAI with a big lead. There seems to be a lot of talk that Gemini is now catching up. Is that your impression as well?
I mean, we're not in that market, so I don't know about it.
I'm asking you as the dispassionate observer.
Yeah, the statistics would seem to suggest that. It would seem to suggest that, with their kind of greater distribution, with their greater existing reach, they've been able to make a lot of progress in kind of recent times. And again, this is why, consumer is fickle. This is why I would be careful if I were a consumer company in kind of, what was on my balance sheet.
Let's jump then to that big question, which we originally asked.
That was the Bloomberg editor-in-chief, John Micklethwaite, with the Anthropic CEO, Dario Amodei. If you're just tuning into the program, welcome. This is Bloomberg Surveillance, and we've got to start with the price action. Equities down and down hard. We're off by 1.6% on the S&P 500. On the NASDAQ, big tech getting absolutely hammered so far this morning. If you turn to the bond market, Treasury yields on 10s. Never mind 420. Remember the first few weeks of the year? Really tight trading ranges. 10s can't get through 420. Now we're having a little sneak peek of life close to 430.
Yeah, and the real question for so many people is why. On one hand, you've got Japan, of course, creating a lot of volatility. On the other side, there is this whisper that it's a sell America kind of trade. We've been talking about that all morning. It even spurred Treasury Secretary Scott Bessent to come out and say, that defies logic. So that is a scuttlebutt, even though we are seeing this across the world.
More on that in just a moment. Need to get you some single names, some morning movers. Let's cross over to Danny for more. Hey, Danny.
Hey, John. Yeah, a tough session for a lot of these names. I want to point out JP Morgan getting caught off in the sell-off, down 1.8%. Is this politics related? Because we did have the President of the United States on Saturday saying that he would be suing JP Morgan for what he claimed was debanking him after January 6th, and that political mess that came from that. JP Morgan for itself, they have said that we don't do that. We don't debank people for political reasons, and that's as far as they went to comment on it. But those shares down 1.7%. The president also expressed dismay that the Wall Street Journal reported that Jamie Dimon had been one of his Fed picks. Trump, of course, pushing back on that story. Elsewhere, you pointed out tech having a really bad day. I should point out all those memory chip stocks falling hard in today's session. Apple also getting caught up in the sell-off, down 1.2%, a downgrade from Citi, saying that it's because of the memory chip stocks, because they're so expensive. Apple's going to struggle with its margins, but it only downgrades it to 315, so that's still about a 25% gain from current share price. Finally, rounding things off with some deal news this morning, Wrap Therapeutics with a deal. GSK will be buying the company in a $2.2 billion deal. It values the company at about a 65% premium from the close. They make a lot of immunology and anti-inflammatory deals, so the price action just about getting to that premium. We're up 64% in today's session, John.
Hey, Danny, thank you. More from Danny in the next hour. Plenty of price action to kick off this Tuesday morning. Turning to the economy, companies adapting to rapid shifts in the labour market as AI integration becomes increasingly widespread. It's going to be a huge feature of the conversation here in Davos, Switzerland. And to add to that conversation, joining us now is Becky Frankowitz, the President and Chief Strategy Officer at Manpower Group. Becky, good morning. Good to see you.
Nice to see you.
Let's get into this. Jobless growth is a big, big story, I think, for this World Economic Forum, and arguably the story the president's got to address himself when he speaks at this forum tomorrow. Can you describe the levels of growth we're seeing and whether we're seeing a decoupling in the level of job growth that we've seen in the last 12 months.
Yes, I think what we're seeing is the anticipation of AI. So that's the interesting thing. AI is still in its infancy. It's a baby, and we're starting to see it grow up, but it's not embedded in most companies still today. And so really what we're seeing is the anticipation of impact, and that's what's causing people to either delay, either increase, or not need to hire, and that's where we are right now.
So are you seeing companies try to increase flexibility by leaning into temporary workers just a little bit more?
So you're the third person I've heard that from even today, and so it's a hot topic, but the data would say no, we're not seeing that yet. I think what companies are saying now is we've probably postponed hiring as long as we can. We need to do something, and in this unknown of what AI is going to do, let's bring in workers that we have more flexibility with. And so we haven't seen the data show that yet, but that is definitely the conversation.
Who is getting hired to the extent that there are jobs being created? Is it people who are experienced and have already been in the workforce for a while, or is it younger people who actually are natives of the technology?
Yeah, it's varying by sector. And so in the tech space, we're seeing that the job description is requiring 5 years or more experience because there's been quite a slowdown in tech hiring. However, you go into healthcare, we're seeing a decline in the number of years of experience. And so we're starting to see a nuanced job market in a way that we haven't seen, at least since COVID.
How much do you expect a lot of the jobs that have been cut to never come back? That as a lot of these companies really understand the efficiencies more, really are in the early innings, we are having a structural shift in the labor market where many fewer workers are actually needed.
Yeah, so what we're seeing today is when a job is hired, about 20% of the time, it's like for like, which means 80% of the time, it's a nuance on the job. So we're already starting to see jobs be hired that aren't the same as the jobs they're replacing.
That's interesting, because last night I heard an executive say that firing will be very quick, but hiring will take years, and that's the bridge policymakers need to focus on. Would you agree with that assessment?
Yeah, and I think that, yes, I would, and it's the humanity in that space. And so we have this duality happening right now between the now and the next. How do I lead for the now and build for the next? And what's in between is our workforce. And how do we make sure our workforce has confidence that they can, of course, contribute today, but also be ready to contribute tomorrow?
A big feature of this Davos is the President of the United States, and he's been leaking out what he's going to talk about in terms of affordability. How does Washington, just in general, or even governments internationally, how do they address this issue?
Of affordability?
Of this crisis of potentially AI taking jobs.
Yeah, well, I think, again, 3 years ago at Davos, the talk was AI's coming for your job. Now the talk is AI's coming to your job. And that shift is an important one because it means now we know AI will take part of tasks. But the big unlock for AI is when we think about the outcome that we want and how you redesign the process. And again, the duality of humanity, we need workers today. They have to keep contributing, which is why John asked me the question about temporary labor and how do we keep flexibility, because we have to perform today towards an unknown future.
Some of these themes are already developing. We caught up with Citigroup earlier this hour, and Lisa asked him about what's happening with jobs. They're doing this quietly anyway. If you look at the overall staff levels at some of these banks over the last several years, they've barely increased. Profits have absolutely exploded. Bramo, I would suggest if you look at the banks on Wall Street, some of these things are already happening.
They have actually contracted their staff at the fastest pace, going back to even some of the depths of the financial crisis, but it's coming without that commensurate slowdown. Exactly to your point, jobless growth.
Becky, what is making them more productive? Where is it coming from?
Well, we're just squeezing more for less is what we're doing today. Again, waiting to see what AI can come automate. But when we ask companies if they're going to hire or not going to hire, AI is only 20% impact on those answers. And so it really is, how do we keep control of our workforces while we're anticipating something in the future?
Earlier this hour, I mentioned a PwC survey. I'm going to mention it again because I think it's absolutely amazing. On a weekend, at the start of a week where all the news flow will be dominated by tariffs and geopolitical risk, you survey CEOs in America, survey CEOs worldwide, and ask them what is the region they're most excited about, and it's America.
Yes.
And it's up on last year. It's actually up on last year. It's gone from 30% to 35%. What is so hot about America right now?
Yeah, so one is the adoption of AI. I mean, the American population is one that says, give it to me, I'll try it, versus are we sure it's going to work with skepticism? And so part of it is the entire culture of the country is built on adoption, and that translates into the workforce. That is one. Two, there is this drive for growth that's part of the American spirit that I think you're seeing show up. And so some of it is I'd say soft, But the labor market and growth is full of feelings, John. It's one of the things we've learned. We thought it was data. It's actually not. It's how I feel. And fortunately, people are confident in America today.
How do you feel, Becky? Feeling confident?
I'm cautiously optimistic is what I would say. I'm cautiously
Diplomatic.
optimistic. Yes, cautiously optimistic.
Becky's good to see you.
Thank you.
Thanks for being here. Thank you. Becky Frankowitz there, the Manpower Group President. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Back with us. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Japanese Prime Minister Sanae Takaichi's election pitch to pause taxes on food, sending bond yields soaring to records. The rate on the 40-year is surging past 4%. That's the highest since its 2007 debut. Continued volatility expected in Tokyo trading ahead of the snap election February 8th. President Donald Trump inviting world leaders to become members of his Gaza Board of Peace. Invitees include the leaders of Russia, Turkey, Argentina, and Canada. According to a draft charter seen by Bloomberg, the Trump administration is asking countries that want a permanent spot to contribute at least $1 billion. French President Emmanuel Macron declining to join the board. Fed Chair Jay Powell will attend Fed Governor Lisa Cook's SCOTUS hearing. Sources telling us here at Bloomberg, Powell plans to sit in on Wednesday's session in the case of President Trump's attempted firing of Cook. Fed watchers and analysts say the case will impact the president's ability to fire Fed governors and influence the central bank. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in the next hour. Up next on the program, financing the AI boom.
We are safely and soundly deregulating the banking and financial system. According to Oliver Wyman, we may have added $2.5 trillion in lending capacity, which will help finance our AI boom.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're live at the World Economic Forum in Davos, Switzerland.